Good evening, students. Wishing you a very happy Diwali, right? I hope you have enjoyed a lot on this festival of lights. And today we are back to our studies, and we have already taken three classes on reporting topic and last class on the reporting topic, wherein we are going to cover all the remaining topics like SA 710, 720. And of course, definitely we will be practicing questions also, right? Right, Venugopal sir? So
Yes,
with
ma'am.
this, I hope I know you have enjoyed a lot in your festival time, during your festival time, but I hope you have allotted specific time slot to your studies also, because it should be part of our routine, right? So, and we are today going to conclude a very, very important session. It's reporting as a 700 series. It's very, very important, not only when we are student, but also when we are chartered accountant, right? Because it's very important role of chartered accountant to report. When we are concluding the audit, we have to report. So while reporting, to what are the considerations, what are the factors we need to emphasize, we need to take care, all those we have covered, right? What are the elements of an audit report, when we give key audit matter, when we modify the opinion, in which situation we give disclaimer of opinion or adverse opinion, right? So all those factors we have discussed in our earlier classes, even caro reporting also being covered in your previous sessions, right? So today we are going to cover remaining standards on auditing, and thereafter we'll be practicing questions. So again, not taking much of the time, we are having our faculty CA Venugopal sir, and he'll be taking you through the journey. In case still if you have any doubt, you can reach to me, and I hope you all have already downloaded BOS mobile app, right? Ask your query feature is there for you. With the help of that, you can reach to us. We have also started our live virtual revisionary classes for January 26th, and schedule is Monday morning and Saturday morning. So you can take benefit of that also, those who are going to appear in January or maybe after that. So you can take full benefit of that. Okay. So not taking much of the time. Venugopal sir, over to you.
Thank you, ma'am. Good evening, students. So, as we have covered in the previous sessions, the entire chapter is around section 143. You may take it all the standards. You may take caro clauses. You may take reporting of fraud. You may take duty to inquiry and duty to report. All those things are coming out from section 143 itself. So that's how we can able to remember and we can able to recall the entire chapter if one has to. So these are standards on auditing, which we are going to take it up from this chapter. And Caro discussion, we had a Caro discussion. So I just want to ask few more questions just to recall what we have discussed. Can anyone tell me what is clause 19 talks about? Clause 19 talks about, just a quick recall for 10 minutes.
Sir, good evening, sir. Class 19 talks about the key financial ratios we need to report. If there is any adverse the fluctuation variance is about 25% or more, we need to report that as well.
Partly correct, fine, okay. Clause 20, what does clause 20 talks about?
Sir, class 20 talks about that CSR activity, sir.
Okay, okay, good. So similarly, I request everyone to revise the clauses. You make a summary, you make a short notes and revise it. So we have discussed case-based scenarios in CARO. We have discussed audit versus certificate, notes to accounts versus audit report, duty to sign, comply with auditing standards, all those things. What are the standards we are going to cover? Objective purpose of SA 700. I emphasized on to form an opinion on the financial statement based on the evaluation of the conclusions drawn from the audit evidence obtained. So these four parts of audit objective or SA 700 reporting objective that we have discussed in detail. We also covered going concern scenarios. This revision or this short notes what you have prepared is needed because the questions may not come isolated from individual standard. It always comes from multiple standards. So what we are going to cover in essay 710, what we are going to cover essay 720, it all links with your essay 700, essay 705, essay 701, essay 706. It eventually needed this revision. So alters responsibility, where we need to fit alter responsibility, what are the options available? We have covered few questions, and we have also seen in detail, we had a discussion about CAM, where it is applicable, what is the purpose. So we also discussed the differences between CAM and modified opinion. To the extent we also discussed about emphasis of matter and other matter just on surface level. So we also had a discussion on SA705 modifications, when we should give modifications, what are the scenarios, that also has been covered. And we also discussed about the meaning of pervasiveness, material and pervasive. We all know what is materiality. In the previous session, we also discussed what is pervasive, and multiple scenarios, how the each element will be changed in different kinds of reporting, how the wordings is going to change in case of individual reporting was also dealt in detail. Few miscellaneous items like scope limitations, if management is stopping us, refusing us to give some audit evidence, what we should do. If auditor wants to withdraw, what he has to do. And in case of auditor has given adverse or disclaimer opinion, can he able to give separate opinion on different elements of the same financials? He cannot. That also has been discussed in detail. So I also gave homework. So how many of have you already completed homework? And if you have any doubts in your homework, we will eventually take in the end of the session. But how many of you have completed the homework? I told you to take the screenshot and perform the homework.
Yes, sir. I have done, sir.
Good, good. So keep all your doubts at one place. We will discuss at the end of the session, because all these are also not talking about SA705. It also has SA706 linked with it. So probably by this class, your doubts will also get clarified. But if you have any doubt which is remaining even at the end of the session, we'll take it up that as well. So what are we going to today? Sorry, there was some. Hope I am audible to all of you.
Yes, sir. Now audible, sir.
Sorry. Yeah, just a second. Yeah, am I audible? And the screen is visible?
Yes, sir. Screen visible and you are audible.
Yeah, thank you. Thank you for confirmation. Sorry for that. So SA 706, it talks about emphasis of matter paragraph and other matter paragraphs in the independent audit report. So we have seen when we are going to give CAM, when it is applicable. We have also seen when a modification is needed. Similarly, we are going to see when we need to give emphasis of matter paragraph, when we need to give other matter paragraph. Before going to that, let us understand the objective of emphasis of SA 706, and few definitions also will be covered, which is nothing but the emphasis of matter definition and other matter definition. What do you mean by emphasis of matter? What do you mean by other matter? Then when are we going to give this reporting is also been discussed in detail. So objective, SA 706 objective is to having formed an opinion on the financial statements. Auditor has already formed an opinion. Auditor has already formed an opinion on the financial statements. So he already formed an opinion on the financial statements and he want to draw users' attention. So now the question here is whether opinion is not yet formed or formed. It is already formed. So in emphasis of matter paragraph, we are not modifying the opinion. We are not touching our opinion paragraph. So if we are giving clean report, SS, we refer to SA 700. If we are giving modified opinion, we are referring to SA 705. So SA 700, 705 we have applied. We have already got the opinion. Now we are not going to touch our opinion. We are not changing our opinion by applying this standard. So what are we going to do in this standard? We want to draw users' attention. When in the auditor's judgment, it is necessary to do so by way of clear additional communication in the auditor's report. So the opinion is already formed. So we are not changing the opinion. We just want to tell our users, stakeholders to pay more attention to this matter. So auditor's judgment that there is some matter which was reflected. That matter we want to tell users to read it with more attention. Every item in financial statements, whether it is explanatory notes, whether it is significant accounting policies, everything is important. But this is, we are telling users to read with extra attention. So we are not changing our opinion. So opinion is SA 700 and SA 705. So when it comes to SA 706, we are only telling user, we need to draw users' attention in auditor's judgment, okay, by way of clear additional communication in the auditor's report. So which are those matters? A matter, although appropriately presented or disclosed in the financial statements, it clearly says matter, although appropriately presented or disclosed. So matter has already been disclosed in the financial statements. That matter we are picking up and we are telling users, we are telling stakeholders to read it again or to pay more attention to it. So what are those financial items? It can be fixed assets, it can be inventory, it can be revenue, it can be profitability, it can be any matter which is already reported in financial statements. And second item, as appropriate, any other matter that is relevant to users' understanding of the audit. Now B point, we should further bifurcate into three parts. As appropriate, any other matter that is relevant to users' understanding of the audit. Number one, the auditor's responsibility. Number two, or the auditor's report. Number three. So what is other matter they are talking about? Any other matter that is relevant to users' understanding of the audit. Relevant to users' understanding of the audit. How audit has been performed. Let us talk about joint audit. So in case of joint audit, so whether you are giving a joint report or an individual report. So let us recall what you have already covered in SA 299. So joint auditors, in general, they give joint report. Is there a possibility that they can give different reports? Let us say there are 3 joint auditors. Can they give individual reports?
Sir, when there is a conflict between them, yes, very much they can issue the separate report stating the reference also.
Correct. So if there is such scenario, so you want to explain to users that although we are joint auditors, I am giving a separate report. In other matter paragraph, you will mention that there is another auditor who is doing the audit or other auditors who are doing. So that such kind of how you have conducted your audit, that understanding you want to give it to users. Auditors' responsibilities. Let us talk about consolidated financial statements. You may be doing the audit of holding company, but there are other auditors who are doing audit of subsidiary companies. So you are not fully responsible for those subsidiary audits, or you want to inform the users, you want to tell them that, see, this consolidation I am doing, but individual subsidiary financial statements have done audit by some other party, they are also responsible. So that paragraphs you want to bring into your financial statements. So you will also talk about auditor responsibilities. Third, talk about auditor's report. Let us talk about auditor's report. So current year you are the auditor who got appointed, but previous year there were predecessor auditor who has done the audit. So you want to specify in your audit report that previous year audit opinion which was issued was not done by me, it is done by some other person. So that fact you need to bring upon in the audit report in the form of other matter. So there are two items which we have discussed. First, a matter which is already presented or disclosed in the financial statements. Second, any other matter, but which is relevant to users' understanding of the audit, number one, the auditor's responsibility, number two, or the auditor's report itself is number three. So if these items you want to draw users' attention, that matters you will discuss in emphasis of matter paragraph and other matter paragraphs by way of additional communication in the auditor's report. So the emphasis of matter paragraph and other matter paragraph is an additional communication in the auditor's report. It is not forming part of opinion. So let us see what is emphasis of matter paragraph, what is other matter paragraph. So emphasis of matter paragraph included in the auditor's report that refers to a matter appropriately presented or disclosed in the financial statements. So it clearly says there is something which was presented or there is something which was disclosed. You have already, let us say, what is presented? Balance sheet, profit and loss account, notes to accounts. So this can be taking it as presented. So disclosed, related party transactions, contingent liability disclosures, all those comes under disclosures, right? So there are presentations, there are disclosures which you have given in the financial statements, which is already presented, which is already very much available in the financial statements. If you pick those, if you take those and tell user to go through it, then it is emphasis of matter paragraph. Example, there is a huge pending litigation, a big case is going on. Management disclosed it that 10 crores of tax demand has been raised by income tax for under section so and so. The case is going on and the chances of winning or the chance of losing is so and so. Company is striving for fighting the case at appellate tribunal level. All the disclosures has been given in the financial statements. Now, what you want to tell? You just want to bring that. You just want to bring that to users' attention. Kindly go through this. There is no modification, and you have not done any extensive audit procedures. There are no complexities involved in that. So it's just you are telling there is one significant item. There is one important item. Users, please go through this. So this is all about emphasis of matter paragraph. Next, other matter paragraph. What is other matter paragraph? So other matter paragraph, a paragraph included in the auditor's report to a matter other than those presented or disclosed in the financial statements. So it's a negative statement. So emphasis of matter is already appropriately presented or disclosed. Other matter paragraph is talking about other than those presented or disclosed. So the matter is not available in the financial statements. The matter which you want to discuss, which you want to convey to stakeholders is not available in the financial statements. So that matter, you want to bring it to notice to stakeholders. What are those matters? Not pertaining to any matter. only restricted to 3 items. One is with regard to auditor's responsibilities. Second is with regard to auditor's report. Third is with regard to understanding how audit is performed. If these 3 matters are there, which are not presented or disclosed in the financial statements, only those matters has to be kept in other matter paragraph. So with the definition, we also understand the scope of emphasis of matter paragraph. We also understand the scope of other matter paragraph. So now I would like to ask few questions. What is the difference? What is the difference between emphasis of matter paragraph and key audit matter paragraph? What do you understand? It may be right or wrong. Kindly tell what could be the answer. What do you find the difference till now?
Sir, as per 701 talk about key audit matter, CAM talks about it's applicable for listed entities. And others,
Okay.
it's option of the auditor can provide the key auditor matter. In the key auditor matter is based on the judgment, significant judgment. Here, it should not be any modified opinion. It is a communicative value to the user of the reader of that financial statement is needed here based on the audit. Say example in particular items here, say example revenue recognition is very important, how it is revenue is recognized. The thing is first he need to discuss with that those charged with governance, then only he has to report in the CAM is not the, it is not other it's not modified the opinion as well. The thing is that it provide the information. Here in this case, the emphasis matter paragraph, it's already presented in the financial statement and disclosed in those items which auditor is feels that it is important to the readers. Then he will put it in the emphasis of matter paragraph.
Correct. So good, very well explained. Now I'll give you few more pointers to understand what is CAM and what is EOM. So even in case of key audit matter, the matter which we are referring to is appropriately presented or disclosed. Even in emphasis of matter, the matter is appropriately presented or disclosed. The question comes is, in key audit matter, the matter which was presented or disclosed, auditor has faced some challenges. In emphasis of matter, auditor has not faced those challenges. There are complex judgments involved in case of key audit matter. There are no complex judgments involved in case of emphasis of matter paragraph. Hope now you got some clarity. Third, auditor has not taken a straight route. He has taken he had performed alternative procedures to come to a conclusion. Here, emphasis of matter paragraph, probably the evidence which he got is straightforward. So that's the major difference between key audit matter and emphasis of matter paragraph, which is very, very much needed to understand that. Second, like already discussed, that key audit matter versus modified matter. So if it is a matter which is not appropriately presented, misappropriated, misstatement, then it is a modified opinion. So here we are telling appropriately presented or disclosed. Let us say if it is misappropriated, if it is misstated, then it goes to modified opinion, either qualified or adverse or disclaimer. So we should carefully see if a matter which is misappropriated, if a matter which is misstated in the financial statements, then we don't come to SS 701 or SS 706, we will go to SS 705. Similarly, if a matter which is presented where auditor has faced many challenges, complex judgments was involved, and the auditor has performed various alternative procedures to come to a conclusion that it is presented true and fair, it is free from material misstatement, then he should go to key audit matter. So in key audit matter, you not only refer about what you are going to, which line item you are talking about, you also describe about what are all the procedures you have conducted to verify that item, right? In emphasis of matter paragraph, you don't mention all those details. You will just take the item from the financial statements and refer in your emphasis of matter paragraph. So the challenges are less, no complexities, straight audit you have conducted in case of emphasis of matter paragraph. So let us talk about other matter paragraph. What is the difference between other matter paragraph? What are the commonalities we have seen in other matter paragraph and key audit matters paragraph? And what are the differences between other matter paragraph and key audit matter paragraph? Anyone want to guess? While reading, you may have got some doubt. So this is similar to CAM or this is different from CAM. So I'm asking question. The question is, what are the similarities in other matter paragraph and key audit matters? What are the differences in other matter paragraph and key audit matter paragraph? Anyone? Any guess?
Yes, sir. In other matter paragraph, we are communicating to the user about the understanding of the audit. This is the similar thing we are doing
Good,
in the CAM.
good, good, good. What are the differences?
The difference maybe we are communicating two other pointers such as the auditor's report and auditor's responsibilities, which are not there
Good,
in CAM.
good, good. Even more,
And
there is
sir,
one more significant point. One more significant point.
in CAM, we have the matters which are presented and disclosed in financial statement, but
Correct.
in
Good,
other
good,
matter
good,
paragraph, we don't have that.
good, good. That is more important. So that is where the distinction happens. So in case of key audit matter, the matter is available in the financial statements. It is about the financial statements. It is about one specific line item. It is about, let us say, inventory. It is about impairment. It is about provision. It is about contingent liability. So the matter is very much available in the financial statements when it comes to key audit matter. In case of other matter paragraph, the matter is not available in the financial statements. So we need to give emphasis to a matter other than those presented or disclosed in the financial statements. So this is very important distinction between key audit matter and other matter, also emphasis of matter and other matter. So even emphasis of matter, how it is different from emphasis of matter and other matter is also the important point is the matter which you are discussing in other matter, it does not present in the financial statements, it does not disclosed in the financial statements. So such matters you are picking up and you are disclosing it to stakeholders, then you need to report in other matter paragraph. So other matter paragraph is very important. We will also discuss when we are discussing SA 710 and we are also will be discussing when we are discussing SA 720. So 720 is talking about other information. 710 is talking about comparative information, right? So previous auditor has given something in his report. So what are the scenarios, etc. We will discuss more detail when we come to SA 710 and 720. So SA 706, the other matter is also relevant when we are discussing SA 710 and 720. So 720 being other information which is not presented in the financial statements. It is outside the financial statements. We'll discuss that in detail when we are discussing SA 720. But I want to make sure that what is other matter paragraph, how you will use, where you will use, what is definition, what it contains, what is the scope of other matter, what is outside the scope of other matter. Hope we are clear with this. So any doubts still here? Definitions, objective of 706 and definitions of 706, and in a way we have also discussed scope of 706.
Yes, sir. With respect to CAM, is there any chance that a matter is reported in both EOM and CAM?
Good, nice question, nice question. Yeah. So can there be an item? Can there be an item uh, which can be considered as keyword matter, which can also be considered as emphasis of matter? The answer is yes. There can be. There can be. Now you answer me. If it satisfies keyword matter as well as emphasis of matter, which one you'll give preference? Just a guess. It's option A and
Keyword,
option B.
key audit matter because there I have the option to provide much more details about my audit procedures and everything.
Yes, yes. So if a matter which is classified as or which will be considered as key audit matter and emphasis of matter, the answer is 100% right. We will consider it as key audit matter. And it is not about auditor's judgment. It is not your judgment. It is not my judgment. It is clearly mentioned in SA 706. It is black and white. There is no gray area. There is no interpretation. There is no judgment. So when a matter which is classified under key audit matter and emphasis of matter, it has to be classified under key audit matter. It should not come under emphasis of matter paragraph. So can there be an item which is key audit matter and other matter? So I am extending your question. I am extending your doubt. Can there be a matter which is key audit matter and other matter? Is it possible?
No, sir, that's not possible.
It is not possible. Yes. So there is no question of key audit matter and other matter. So now another question. Can there be a matter which is modified opinion, which we want to modify, qualify, and emphasis of matter paragraph?
No, sir, because
No.
opinion is already
No, the answer is no. Yes. So something which you feel present in the finance statements, which is misstated, it is already present in the finance statements, but it is overstated or it is understated or it is not stated, then it leads to modification. It does not come in emphasis of matter paragraph. Because you also understand the objective. I want to recall the objective. Items which are leading to modification, items which are leading to change the opinion paragraph will not come under emphasis of matter paragraph. The moment we read the objective, it clearly says you already formed the opinion. You already
Yes, sir.
formed the opinion. Okay.
Yes, sir.
You already formed the opinion.
Yes, sir. We mention always in the emphasis of matter paragraph, other matter paragraph, or CAM, we will specifically mention our opinion is not modified in respect of this matter.
Correct. Yeah, that we'll definitely mention. We'll discuss that, how to report it. That comes under when we are discussing reporting section. But I want you to give weightage, or I want to give emphasis on the objective. The objective is very clear. Once you frame the opinion, then you come to any matter which is emphasized. So if certain item which is modifying your opinion, you don't come to SA 706. So don't even look at SA 706 when the question is about modifying an opinion. Clear? So we are clear with SA 701, we are clear with SA 705, we are clear with SA 706 to the extent which we have discussed. So any other doubts still here? So let us discuss EOM scope and scenarios. We are already, based on the doubts, we already covered EOM scope. So the auditor shall include an emphasis of matter paragraph in the auditor's report provided the auditor would not be required to modify the opinion in accordance with SS 705 as a result of the matter. So an item which is required to be modified as per SS 705, you cannot include in emphasis of matter paragraph. The matter which no need to mention in SS 705, no need to create or no need to cause a modification, such matters only can be included in emphasis of matter paragraph. Very much clear? So a matter which cannot form part of modification, such matters can only become emphasis of matter paragraph. Next, when SS 701 applies, so now the question, when key audit matter is applied and EOM is applied, which will win? Key audit matter will win. When SS 701 applies, the matter has not been determined to be a key audit matter to be communicated in the auditor's report. So the auditor shall include an emphasis of matter paragraph in the auditor's report. The matter has not been determined to be a key audit matter. If a matter has to be determined as per key audit matter, can we come to emphasis of matter paragraph? The answer is no. If a matter has been determined as key audit matter, then we cannot include it as CAM. Only a matter which has not been determined as key audit matter, such matters can only be described or included in emphasis of matter paragraph. So this was clearly mentioned in standard itself. So there is no judgment, no gray area. It is clear, black and white. When there is a conflict between key audit matter and emphasis of matter paragraph, key audit matter you need to disclose as key audit matter, and the reasoning also we understood. In addition to the matter, we also describe how auditor has concluded, how auditor has performed multiple alternative procedures to come to a conclusion that that matter is free from material misstatements. We are clear with the scope. So let us take one small scenario. When a financial reporting framework prescribed by law or regulation would be unacceptable, but for the fact it is prescribed by law or regulation. So we will take about Banking Regulation Act. So banks which are listed like SBI or any other companies which are listed, they prepare the financial statements as per Banking Regulation Act. They may not be fully in compliance with accounting standards or fully in compliance with Ind AS. I'll take an example. A capital advance given to suppliers, you classify it as non-current assets, but you will not classify under CWIP, capital work in progress. What will be classified under capital work in progress? The amount which was spent for constructing a CWIP, you classify under CWIP, right? The capital advance cannot be classified under CWIP. It will be shown as separate other assets, right? Other non-current assets. In case of accounting standards as well as in case of Ind AS. But in case of Banking Regulation Act, it says you need to include in CWIP. So although it is not right as per the fair presentation framework, but the law is giving you format, law is giving you template to mention such items in specific line item. You need to comply with the law, right? Although it is deviating from the fair presentation framework, because of law mentioning you to do it, you are doing it. So such matters can also be mentioned in emphasis of matter paragraph. So when it is already present in the financial statements, right? The CWIP includes capital advances, right? So that is already presented in the financial statements. You want to mention to the readers that when you apply fair presentation framework, this is not the right approach. However, the company or the entity is complying with specific statute, so they are bound to it. They are mandated to follow the format which was given in the respective act. So such scenarios also will be covered, right? This is the matter which is presented in financial statements, but auditor has to tell the readers that this is how it is presented. Clear? Next, coming to the main section, which is reporting part. How do we report it? So very simple. It has divided into 3 parts. We will start with the heading. The header should be emphasis of matter paragraph. The header you should create a separate section in the audit report with the header emphasis of matter paragraph. Second, you should give reference. You should give reference to the matter being emphasized where relevant disclosures are fully describe the matter. So which note number you are talking about, where it has been discussed, you will give reference to that note number. The paragraph shall refer only to the information presented or disclosed in the financial statements. So you will refer only to the information presented or disclosed in the financial statements. Unlike CAM you will not only present information, but also you will give what are all the challenges, what are all the audit procedures you have covered, how auditor has addressed that matter was also described. So this is another difference between key audit matter and emphasis of matter paragraph. So emphasis of matter paragraph, you just give the reference and you will present the information. You will not give your opinion or your viewpoints or your challenges, etc. in emphasis of matter paragraph. Last, you will mention that auditor's opinion is not modified in respect of the matter emphasized, right? So you at the end of the matter, you will write our opinion is not modified based on the above matters. So 3 sections you report. First, you will keep the header. Third, you'll give that opinion is not modified. Second part is you'll just give the reference to the matter which you want to emphasize to draw user attentions. Okay, and you will give clear section, right? Clear additional reporting we have discussed in objective. So clear additional information by way of this section you will create. So let us see how it is reported. So let us read the question. So in respect of audit of BDS Limited, the statutory audit of the company noticed some matters. The statutory audit wants to draw the user attention towards such matters through his opinion, not modified in respect of such matters. Draft the relevant paragraphs of the audit report for the following matters. The company has planned to resume its construction activities with respect to one of its thermal power project. The activity of such power plant was suspended in the financial year 21-22. The thermal power project comprises of plant and equipment amounting to 5.95 crores and capital work in progress 147.50 crores. So this is the matter which auditor wants to mention in his audit report. Now you need to tell which is the relevant paragraph of the audit. He can report it. He also mentioned because of this matter, the opinion is not modified. So how do we report this? Is it key audit matter or is it emphasis of matter? Is it a other matter or is it qualified opinion? How do we report this? So it has to be reported as emphasis of matter paragraph because first of all, it is not modified opinion, right? Second, auditor wants to draw users' attention. Auditor wants to draw user attention towards such matters. So the objective is clearly mentioned, that user attention. So we will mention it as emphasis of matter paragraph. So how do we report? 3 sections, right? First section we'll keep it as header. We draw attention to the following note of the standalone financial statements. So note number 27 regarding the plans of the company to resume construction or development activities of thermal power project. The carrying amount relating to so and so. Plant and equipment is 5.95 and CVP is 147.50 crores. So we are drawing attention to the following note of standalone financial statement. Wherever it is reported, we'll draw attention and we'll tell users to refer that note. And we will write our opinion is not modified in respect of this matter. Clear? How do we report? Let us see other matters. So other matters, how do we, the scope, other matter scope, like EOM scope, what is other matter scope we will discuss. So the auditor shall include an other matter paragraph in the auditor's report provided this is not prohibited by law or regulation. So the scope of other matter, we believe that it is huge scope, right? But it has to be restricted. If there is something which is confidential, if there is something which law is prohibiting not to report, such information you cannot report in other matter paragraphs. Second, when SA 701 applies, the matter has not been determined to be a key audit matter. This is generally not needed, but in the scope they have mentioned, if an item which is mentioned as key audit matter, you cannot report in other matter paragraph. If an item which is classified as key audit matter, it cannot become an other matter paragraph. For the fact we also know an item which is key audit matter, it cannot become a other matter paragraph, right? So this is other matter scope, similar to our emphasis of matter scope. So let us see one example and we'll see how it can be reported. So in the respect of audit of BDS Limited, the auditor wants to draw users' attention, same thing, and the matter is not modified. So what is that matter? The finance statements of 5 branches are included in the standalone financial statements of BDS Limited, whose financial statements reflect total assets of 90 crores as at 31st March 24 and total revenue from operations 40 crores for the year ended on the date. The financial statements of these branches have been audited by branch auditors. So this is the matter. Can anyone knows this matter by seeing financial statements? They does not know. This is the matter which was not presented in financial statements. Number one. So the definition of other matter, this is the matter not presented in financial statements, but this is the matter which talks about auditor responsibilities, right? So how much is I am responsible and how much is I am relying on other auditors? Okay, that part is taking care. So that information you want to give it to users. So we need to classify it as other matters. How do we report? We'll write other matter, and then we will write we did not audit the financial statements of 5 branches included in the standalone financial statements of the company, whose financial statements reflect total assets of so and so, 40 crores so and so. These have been audited by branch auditors, furnished to us, and our opinion in so far relates to amounts and disclosures included in respect of these branches is based solely on the report of branch auditors. So this is the matter which was not presented in financial statements, but you want to draw users attention, so you are mentioning it as other matter paragraph. So there are few more examples, few more questions we will discuss in detail. So let us solve these questions. So the questions can be coming around 3 types. One is straight descriptive questions, right? Second is scenario based questions and scenario based theory questions. Although if you read the question, it is scenario based question, but ultimately at the end of the question you understand it's a theory question. They are just asking the difference between emphasis of matter paragraph and key audit matter paragraph. They are just asking you to write the difference between audit qualification and emphasis of matter paragraph. But a case has been formed, a discussion has been formed in the question, so that you feel like you need to read the entire scenario, but at the end it is just a theory question. And third type of questions are purely scenario based questions, application based questions, where you need to apply the knowledge, where you need to apply the definition, scope, your understanding about that standard, and then you need to give a conclusion for that specific case. Fourth type of questions are MCQs, wherein you read the options and you need to pick the right option. So I have covered all the 4 questions. We'll see one after another. So descriptive questions. So can you able to answer what is the difference? Sorry, what is definition of EOM and definition of other matters? Could you able to recall? Right? So that could be one simple straight descriptive question which can come from this chapter, come from this standard. Next, there are multiple differences between emphasis of matter paragraph and other matter paragraph, emphasis of matter paragraph and qualification, etc. So what do you write in this? How do you write? In every difference, can we able to write at least 3 points? In general, you tell me in general, what are all the points you will write? Can anyone explain like what could be the possible pointers you can write in any of these 4 questions? Let us take emphasis of matter and other matter paragraph. How do you write? Anyone? See, we will be mentioning the respective standard. Let us say you take B, emphasis of matter paragraph and qualification. So we will write the definition of emphasis of matter paragraph. We will write the definition of qualification. So first we will write definitions. Second, we will give the respective standard which it deals with. So there are standards which deal with emphasis of matter paragraph, which is 706. There is standard which deals with qualification, which is 705. Even in case of key audit matter, we will write 701. Right? In which scenarios we will report it. So definition, standard, and the scenarios where we would report, we will mention those, and key differences, what we have noted between those when we are discussing, that also can be form part of these differences. Right? This is straight theory based question. Now we look into scenario based question. So let us read this question. BPMR and Associates, a renowned audit firm in the field of CA practice for past 3 decades, was appointed to conduct the statutory audit of Rexon Limited, an unlisted company engaged in the business of paper manufacturing. The firm decided to commence the audit for the recently concluded financial year. After making significant progress in the audit, the auditors made the following observation. The management had disclosed in the financials that during the year, one of the warehouses of the company was affected due to major flood. As a result of the same, the company had incurred some losses, but the management was of the view that it was not material. You are required to advise whether BPMR and associates should report this observation in its audit report. If so, which heading should be reported? So, how do we report this? Am I audible to you?
Yes, sir. Sir, in this already disclosed, the management has already disclosed in the financial statement,
Good.
and also it can be reported under the EOM paragraph, sir.
Correct. Good. So as it is already disclosed, okay, it is presented in the financial statements, and auditor wants to draw attention because it's a major flood, right? They mention it as major flood, so you will show it as an emphasis of matter paragraph. So it has to be disclosed. The company has disclosed as it is company into losses, but the management is of not material as per 706 other matter paragraph appropriately disclosed in the financials, but fundamental to user understand, the auditor shall report about the consequence of the flood affected the company warehouse under EOM paragraph. He can report it. We'll see next question. So next question, PTD Limited is engaged in the business of executing construction contracts for its client. There are non-current receivables. Outstanding in the financial statements of the company as on 31st March 24 for rupees 500 crores. Such amounts represents caused by claims raised by the company on its clients relating to cost overruns necessitated due to delays, clients, change in work specification, and related matters. Besides negotiations, the company has also gone for arbitration in some of the said cases. The management of the company has considered the above amounts to be fully recoverable as stated in the notes to accounts. CA Piyush, auditor of the company, has relied only upon management representation in this regard. Besides, he has decided to include the said matter in emphasis of matter paragraph in the audit report. How do you view to include above emphasis of matter paragraph by auditor of the company? How do you view? You understand the case? Can anyone summarize the case? If you can summarize, others will get little time. Can someone summarize the case?
Yes, sir. The company PTD Limited engaged in the business also. There are non-current receivable which is reported in the financial statement March 2024 amounting rupees 500 crore. Such amount represent cost by the claim raised by the company on its client related to cost overrun necessitated due to delays in.
I don't want you to read everything again. I just crux. You can tell me crux. Okay.
In this matter, the management decided fully recoverable, and they
Yes.
given note to account as well.
Correct.
But auditor view that relied upon only the management representation.
Correct.
In addition to that, he decided to report in the UOM paragraph.
So now what is your take? What would be the answer?
See, in this case, the management representation alone is not sufficient. He need to get the sufficient and appropriate audit evidence in relating to matter.
Good. So what do you feel about CA Piyush opinion? He felt that he want to include in the UM paragraph. Is it okay for you? CA Piyush is correct in his contention. His contention is correct. So you are right. Okay.
Yes, sir. He can put in.
Anyone has different answer. He can keep it in.
See, EOM paragraph is okay only, sir.
Maybe a modification can also be option if
But the thing is that, yeah, only the representation is not. He has to get the other audit evidence relating to that matter. If the management is not ready to provide, then limitation is initiated. In that case, he can go for modification of opinion. Otherwise,
So if you think, just recall what we have discussed in EOM scope. So if some item which is to be considered as qualification or a modification, can it
Well,
be considered as EOM?
no,
I
sir.
think
no.
See, what I am trying to say here, sir, if the auditor is able to get the sufficient and appropriate audit evidence for that relating to 500 crore, then that the management is ready to update in that notes to the account and properly disclosed. On those case, then the auditor can provide the EOM paragraph. If the management is not ready to provide, not ready to update, in that case, they can go for modified opinion.
See, management,
so I think it
yeah,
should be reported as key audit matter because the auditor has faced some challenges. That is why he has got only the management representation in this regard.
yeah. We got another view also. So there is qualification, there is key audit matter, there is emphasis of matter paragraph. So there are three views now, right? So how do we sort these views? Let us sort one after another. Okay. Does in the question, did we see auditor has faced challenges? Yes. But did we see auditor how he addressed that challenges? How he concluded that the material, the item is free from material misstatement? Such information is not available at all. Okay. So auditor still believes he has relied only the CA Piyush, the auditor of the company, has relied only upon management representation in this record. Okay. So someone is telling that if he asks, management may provide. No, here the case is very much clear. The auditor has completely relied on management representation, right? So here we should tell, okay, the auditor relying on management representation does not, okay, constitute as sufficient and appropriate audit evidence to get comfort about this non-current receivables, right? Number one. Okay. So the contention of reporting it as emphasis of matter paragraph is wrong. Okay. So auditor has to conduct certain procedures, and if rightly pointed out, if the data is not data is provided, then maybe we can go to key audit matter. If data is not provided, then we should go to qualification, right? So all three are understood. But the question here is how do we view decision to include above matter in emphasis of matter paragraph by the auditor of the company? So we should restrict. We may write little. We may go little further and write our views. But first we should respond to the question. The question is, can auditor make it as an emphasis of matter paragraph? The answer is no, he cannot, because of so and so reasons. Clear? Understood? You can elaborate further once you answer the question. Okay, if you want, you can elaborate further saying that, however, if Piyush changed his decision to obtain more audit evidence, and if audit evidence was not available, then it is qualification. If audit evidence obtained by doing alternative procedures, etc., and finally he got comfort, then it is key audit matter paragraph. But it is always recommended to fix or right answer to the question, right? Let us not, because in audit you can go to some other if and buts. If you add if and buts, that is not the right answer. So you stick to your question. Okay, you can cut till emphasis of matter paragraph by giving reasoning. So let us see how the answer is framed. See, in the given situation, auditor has relied only upon. If you want to add, you can add. Yeah, relied upon management representation only. He has not performed any other audit procedures like verifying contracts with customers, status of arbitration proceedings, etc. Because there are also certain cases which filed. So management represented by themselves does not constitute sufficient appropriate evidence, as rightly pointed out. Performing necessary audit procedures may lead auditor to conclude that modification is, in opinion, is necessary. So it may lead to modification or it may lead to cleared matter. You don't know. In such circumstances, matter cannot be included in emphasis of matter paragraph, right? Therefore, auditor should form his opinion by performing necessary audit procedures and obtaining sufficient appropriate audit evidence. So we are concluding that it is only when he concludes that modification of opinion is required as a result of the said matter in terms of S705. This we are discussing about the scope. So a matter which is necessary to be concluded based on the evidence and which can go for SA705, it can never become an emphasis of matter paragraph that we have already discussed in the scope. So clear, everyone? Can we go to next question?
Okay, sir.
Yeah. So we came to MCQs, certain MCQs also. So we saw descriptive questions, straight descriptive questions. We saw case-based questions where you need to apply your knowledge to answer the question. Not only individual standard, but multiple standards from multiple chapters also. So now we will see 2 or 3 MCQs. Let us read the question. So the company in the notes accompanying its financial statement disclose the existence of suit filed against the company with full details. Based on the audit evidence obtained, it is necessary to draw users' attention to the matter presented in the financial statement by way of clear additional communication, as there is an uncertainty relating to the future outcome of the litigation. In this situation, which of the following reporting option would be correct if the auditor is satisfied with the conclusions reached by the management and this matter is fundamental to the reader of the financial statements? So which would be correct statement if the auditor is satisfied with the conclusions reached by the management? Can it be included as emphasis of matter paragraph in the auditor's report, having a clear reference to the matter being emphasized and issue a qualified opinion? Included in the basis for adverse opinion paragraph and issue an adverse opinion having a clear reference to the matter relating to the notes to accounts? Include basis for disclaimer of opinion paragraph having a clear reference to the matter and issue a disclaimer opinion, including an emphasis of matter paragraph in the auditor's report having a clear reference to the matter being emphasized and to where relevant disclosures that fully describe the matter can be found in the financial statements. So whether A, B, C or D?
I think option D is the right one.
Yeah, correct. So it's option D. So the reasoning is it has to be included as emphasis of matter paragraph. You cannot give qualified adverse or disclaimer opinion, right? Because auditor is satisfied with the conclusions reached by the management. So the pending litigation, the case which was filed, all the details have been given in the notes by way of. So auditor wants to just give a draw attention, right? Next. So the option D is right answer. So one more question, read it, and once you are done, come up with the answer, let me know. So what is the conclusion? Anyone got the answer?
A.
So you are the auditor of Delco Limited. decided to give a qualified or adverse opinion in the current financial year with respect to non-consolidation of financials of Soccer Limited. Which of the following is true with regard to use of EOM paragraph for some other matter? The auditor cannot add EOM paragraph in his report on any matter as qualified or adverse opinion is given by the auditor. Is the statement correct? Auditor cannot
Yes.
add EOM paragraph in his report on any matter as a qualified adverse opinion is given by the auditor. Correct?
Yes, sir.
Yes.
Point A is I feel appropriate, sir.
Yeah. Next. EOM paragraph on a matter can be added if the auditor's opinion is neither qualified nor adverse in respect of that particular matter and the matter is fundamental to user's understanding of the financial statements. So now you analyze again, go back and read A. Auditor cannot add EOM paragraph in his report on any matter as a qualified or adverse opinion given by the auditor. So before answering this, I'll give you some input. So we discussed CAM applicability. If an auditor has given qualified opinion, can we give CAM in that report? On separate matter, can we give CAM on separate matter?
CAM, yeah, we can give the CAM separate matter, sir. There is adverse opinion, qualified opinion, OPA. Only the disclaimer of opinion, only CAM is not applicable.
So you should apply the knowledge what we have discussed in CAM. So even in emphasis of matter paragraph, can there be two matters? One matter which is talking about qualification, another matter is talking about emphasis of matter paragraph. Can both be coexist?
Yes, it
The
can be
answer is
cohesive.
yes. Good. The
Yes.
answer is yes. Okay. So similar to key audit matter, emphasis of matter can also coexist, right? So you remember the table we discussed.
Yes,
Qualified,
sir.
clean report, CAM is there. Qualified, CAM is there. Adverse, CAM will be there. Disclaimer, no CAM. Similarly, similar table you can apply for emphasis of matter paragraph also. In a clean report, emphasis of matter can be reported. In a qualified report, emphasis of matter can be reported. In adverse report, emphasis of matter can be reported. So the first point is the auditor can add EOM paragraph. So let us read option B. EOM paragraph on a matter can be added if the auditor's opinion is neither qualified nor adverse in respect to that particular matter and the matter is fundamental to the user understanding of the financial statements. So if there are two different paragraphs, we can have EOM paragraph, right? Option B is also you can consider, right?
Yes, sir. Option B also can be considered more appropriate.
Yes. See, EOM paragraph on any matter can be added in the auditor's report, even if the report is qualified or adverse with respect to that particular matter. So that particular matter, can it be coexist EOM and qualified?
No, no. That is no, sir.
So C
Straight
is
away no.
dropped. Straight away no. EOM paragraph indicates that the auditor opinion is modified in respect of matter emphasized. Is it correct?
No, that is also wrong.
EOM means it is not modified. It is EOM does not talk about opinion, right? So D is also wrong, C is also wrong. Now you need to pick between A and B, right? So what do you
Between
pick?
A and B, I will pick P only. B only.
B, okay, because A is okay, it's slightly not okay, correct, or it is interpretative, right? B is perfect answer. Okay, B is categorically clearly okay mentioned as the right answer. So if you want to choose one out of four, so it is which is 100% correct is B, 100% wrong is C and D. A is kind of 80% or 70%. Okay, it is here and there. So you better choose B. There are
Uh,
cases, okay, you may encounter.
yes, sir. And
Yes,
also in the it's very specifically given that matter fundamental to the user understanding of the financial statement. That point is
correct,
given
correct.
more weightage than A.
Yes, yes. Sorry, A or B?
Sir, I'm telling B is a correct answer. The thing is that the point fundamental to the user understanding of the financial statement, that statement is giving more weightage than A.
Correct, correct, correct. So answer is B, right?
Answer is B.
Yeah. So simple questions. So auditor of RJ Private Limited shall mention the fact that the financial statements for the prior period were audited by another auditor. So where will you include that fact?
This is the other matter paragraph straight away.
Other paragraph.
Correct. So next we'll see one more question. Okay. So RST and Co, a firm of chartered accountants based in Mumbai, has been appointed as joint auditor along with LM and Co and ABC and Co, an esteemed chartered accountants firm in the same city. While forming an opinion, RST and Co had a different opinion on the valuation of inventories, but LM and Co and ABC and Co had the same opinion and accordingly given their majority stance. Both LM and Co and ABC and Co assert that RST and Co must endorse a common audit report aligned with their opinion. Whether RST and Co should adhere to the opinion formulated by LM and Co and ABC and Co or explore other alternative options. So this is the information given and the options given. So RST and Co will have to go with the opinion framed by majority of the auditors. Option A, right or wrong?
No, sir. Wrong, sir.
RST and Co has the discretion to issue a distinct audit report independently. In such a scenario, the reference to the other audit report issued by majority of the auditors should be noted within the other matter paragraph. You can consider, right?
Yeah, we can consider.
Yes, sir.
RST and Co has the option to incorporate a distinct audit opinion paragraph within the common audit report, accentuating its importance through the emphasis of matter paragraph.
No, that is not correct.
Why?
It will not form part of the emphasis matter paragraph. It will come under that other matter paragraph.
Correct, correct. Because this is all about auditor's responsibilities or auditor's report, right?
Yes, this is auditor report. Auditor report will have the other matter paragraph.
Correct, correct. So we have not selected option A because we have the knowledge of SA 299.
Yes,
We
sir.
have not selected option C because we have the knowledge of SA 706. Okay.
Yes, sir.
Yeah. Option D, RST and Co can align with the opinion formed by the majority of the auditors. However, any dissenting viewpoint held by RST and Co should be prominently highlighted within the emphasis of matter paragraph.
That is also wrong.
Yeah. So
Yeah.
option C and option D has been eliminated because we got the knowledge of SA 706. Option A was eliminated because we have knowledge of SA 299. So we left with option B, which is the right answer. Clear?
Yes,
So
sir.
now,
Yes, sir.
so now we have rapid fire. So please read this and answer to me. So this is, the options are very simple. There are only two options: emphasis of matter paragraph or key audit matter paragraph. Okay. So first, pending major litigation, tax demand. Okay. The situation is that note is well disclosed, no complex audit procedures beyond normal legal confirmations. Will you show it as EOM or CAM?
EOM.
Okay. So other people also has to gear up. If someone, okay, you can also answer. Next, change in accounting policy. Auditors spend significant effort verifying new system controls, cutover adjustments, contract reviews, etc.
CAM.
Sir, CAM 701.
Yeah. Next, change in accounting policy. Again, the same section, same item, same matter. Properly disclosed, no unusual audit challenges.
EOM.
EOM paragraph.
Good.
Sir, EOM 706.
Good. Next, impairment of goodwill or assets. Listed company with complex discounted cash flow models, assumptions, independent valuers, sensitivity testing, etc.
CAM.
Sir,
CAM.
CAM 701.
Good. Next, restatement or prior period adjustment. So corrected error disclosed in notes, auditor only verified restated figures.
Corrected. Sir, any other matter paragraph 706.
Sure. Something which is disclosed in the notes, will you report it as other matter paragraph?
Sir, I
It will
see.
be emphasis of matter.
Emphasis matter paragraph, but it relating to audit. So that is the reason I got confusion.
Yes. So the questions will be little confusing only. Okay, even in the exam hall. So to eliminate the confusion, you should have good conceptual understanding, and you also have a practice of solving application-based questions. So corrected error disclosed in notes, auditor only verified restated figures. So will you give it as EOM or CAM? Or other matter?
Sir,
It should be CAM because it is the procedure done by the auditor, like it's challenges faced.
No, yeah. So what is the answer? Is it EOM or CAM?
CAM.
So did auditor face any challenges? Auditor only verified restated figures. Okay.
sir, see,
EOM.
It's emphasis of matter paragraph. Okay. Because he has not faced any challenges, significant risks, any judgments, okay, etc. Next, same item, complex error tracing across subsidiaries, major recalculations, material impact on equity.
Now it is CAM.
Now it is CAM.
yes, sir, CAM.
Next, impairment of goodwill. We have already discussed here impairment of goodwill. So again, impairment of goodwill. Small entity with clear valuation note and simple assumptions. Auditor relied on management's workings.
EOM, sir.
Yeah, correct. Next, pending major litigation. We already discussed here pending major litigation. Okay. So auditor had to assess probability of outcome, rely on legal opinions, and quantify exposure. EOM or CAM?
Here should be CAM.
Yes, CAM.
Yeah, correct. Next, going concern uncertainty. Auditor exercised major judgment, evaluated complex cash flow projections, support letters, sensitivity analysis.
CAM.
It's CAM, sir.
Correct. Next, disclosure, going concern uncertainty. Disclosure is adequate. Uncertainty fundamental to use understanding, but auditors work routine.
EOM.
Routine auditors work.
EOM.
Disclosed
EOM, but EOM in the form of material uncertainty related to going concern. Concern. When it comes to going concern, you will not keep a header of EOM. You will reflect as material uncertainty related to going concern. So here you need to go to SA 570.
Yes, sir.
Okay.
Murgu.
Yeah, but the level of reporting is very much similar. The placement of material uncertainty related to going concern is also similar to emphasis of matter paragraph, because you also refer to the note. So in a way, material uncertainty related to going concern is very similar to emphasis of matter paragraph, because management has clearly given that in the notes, which is appropriately presented and disclosed in the notes. You are taking reference of it and you are presenting. Only because it is going concern, it is very important, and it is dealt in separate standard. You will show it as material uncertainty relating to going concern instead of emphasis of matter paragraph. But in substance, it is also emphasis of matter paragraph. So one has to remember, this is very, very important. You cannot mention going concern in emphasis of matter paragraph. right? You need to immediately go to SA 570 and mention it as material uncertainty related to going concern. So this is with regard to SA 706. Any doubts still here? If you have any doubts, let us discuss. Otherwise, we'll move to SA 710. Clear, everyone?
Yes, sir. Very much clear, sir.
Yeah.
Yes,
Next.
that's great.
So SA 710, it talks about comparative information, corresponding figures and comparative financial statements. So comparative information. So if you see any financial statements, they present 2 years financials, right? So current year and corresponding year, current year and previous year. Let us say you are auditing for 23-24. So the financial statements reflect financial year 23-24 as well as financial year 22-23. So there are 2 years. One is current year, second is corresponding year or previous year. We say it as corresponding year. Okay. Now, the auditor, he is signing on the balance sheet, right? So balance sheet not only contains current year, it also contains corresponding, okay, figures. So will there be any obligation on auditor to review or to audit corresponding figures? Do you think? Or should he restrict the audit only to current year because the report is given only for current year?
While he, sir,
Sorry.
while he doing that current year audit, he will frame such a way that it will include the previous balance also. He will test along with the current period.
Correct, correct. So predominantly the audit is carried out for the purpose of current year. However, if auditor comes to his notice any material misstatement regarding opening balances, any misstatement with regard to previous years, any event that caused in current year which impacts previous year, such items also has to be considered. Auditor is responsible for such information also. So auditor is not 100% responsible, but he also has certain responsibilities with respect to corresponding figures. So what is corresponding figures? What is comparative financial statements? We'll discuss in detail. But let us have a view that if an auditor is signing the balance sheet, he is not only signing current year, it also has previous year numbers. It also has corresponding figures numbers. How far auditor is responsible to previous figures numbers? Let us say the previous period is audited by same auditor. The previous period is audited by different auditor. The previous period is unaudited. So there are multiple cases which we will be dealing in this standard. So why are we giving only 1 year comparatives? Why not 2 years or why not 3 years? Anyone has any idea? And why can't we give only current year? Why we cannot eliminate the comparative figures? So that will be forming part of your FR where you have qualitative characteristics which talks about relevance, right? So how much you need to give, what information you need to give. So there are qualitative characteristics which will be discussed in FR in detail. Okay. So that is the reason we give 1 year. We will not give other years because it lost its relevance. 3rd year, 4th year, okay. If you go back, it lost its relevance. Okay. So how much you need to give, that all discussed in FR. Okay. Qualitative characteristics.
Yeah, as per the conceptual framework.
Correct. Okay. So here we are discussing, as we have already reported. So what are the responsibilities of an auditor with regard to corresponding figures or with regard to comparative financial statements? What it mean? What kind of reporting you should give? All those things. Okay. So we'll be discussing objective similar to all other standards. We'll discuss what is the objective of standard SS 710. We will also discuss about audit procedures. So audit procedures, what are all the audit procedures you carry out, which is made mandated as per the standard, and finally the outcome, you go for audit reporting. So objectives of auditor with respect to corresponding figures. Current year, you have done sampling, you do materiality, you check written representations, you apply so many standards for current year audit. But this is the only standard which gives you guidance for corresponding year's audit. So whatever we are discussing here is very specific to corresponding figures or comparative financial information, comparative financial statements. So although it is repetitive in nature, okay, what you generally do for your current period audit, but here the objective is defined for corresponding figures or comparative financial statements. So what do you do for audit? Generally, what do you do? What is the objective of audit? You recall SA 700. You recall SA 700. What is the objective of SA 700? You form an opinion. You form an opinion. You provide an opinion based on the evaluation you have done. How can you do evaluation? Based on the conclusions you have reached. How do you give conclusion? Based on the sufficient and appropriate audit evidence you have received, right? So similarly here also, the objectives of the auditor are to obtain sufficient appropriate audit evidence about what? About current year or corresponding year?
Corresponding year.
Corresponding year, which are included in the financial statements, has been presented in all material respects in accordance with financial reporting framework. So whether the current period, what you have applied, whether you have applied for the previous year or not, okay, has been presented in all material respect in accordance with the financial reporting framework to report in accordance with the auditor's reporting responsibilities. So it is not new. What you are applying for current period, you are applying for corresponding figures or comparative financial statements. So let us go in detail. What is comparative information? What it comprises of? And what kind of reporting you adopt for corresponding figures and comparative financial statements? We'll go in detail. So audit procedures. So let us say audit procedures. So irrespective of corresponding figures or comparative financial statements, you follow the same procedures. Okay. So what do you do for comparative information? The moment I say previous period, the first step you will perform in the audit. Okay. Ignore about planning, ignore about all those things. But when it comes to financial statements, okay, you will do opening balance tracing. What you will do? Opening balance tracing, right? Whether the previous year balances have been accurately carried forward to the current year or not, right? So when it comes to ground level execution, the first step auditor has to conduct is whether the previous year closing balances has been accurately carried forward for the current year or not. So will you check that as an audit procedure? That is the first step, right? So ensure that comparative information agrees with the amount and other disclosure present in the prior period. So last year closing balance of assets, liabilities, equity, whether it is accurately transferred to current year. Okay, you check that whether it is in agreement or there is any difference. If an organization uses accounting software like Tally, okay, or any other software, if they pass some entries in previous period after audit is completed, is it okay or is it not okay? So the question is, audit has been completed, okay, management has passed few entries in previous year financials. Is it fine? Or
No,
should
sir.
it be restricted? Should it be restricted?
No, sir.
Restricted.
It has to be restricted, right? Once the audit is completed or before the start of audit, okay, you need to take a trial balance, you need to take financial statements. Okay, during the audit, you come across certain observations, certain amendments, certain adjustments that you can discuss with management, and you ensure that they will account it in books of accounts in financial statements. So once audit is concluded, now management should not pass any entries in the previous financial year. So how would an auditor know whether he passed or not? How would auditor know? What audit procedures you will do to know whether management has passed certain entries in previous financial years?
We need to get written representation, sir.
See, written representation you will
First one.
obtain. Okay,
Then
okay.
we will read in the trial balance. We will check it.
Correct, correct. See, here in this case, written representation does not work. Here you can able to go and verify the opening balances. So that is what I am trying to tell you. The closing balances of previous financial year is accurately transferred or not. So you see last year signed financials and you see whether the same is reported here or not. Okay, so this we see whether they are in agreement or not, whether they are matching or not. So you perform this step and you will get to know that there is no entries passed. Okay, so that is the first step you do for comparative information. Second thing, so there is presentation, there is disclosure. This step what we are discussing is about presentation. We will discuss about disclosure. So let us talk about, there are accounting policies which they have mentioned in previous year. So same accounting policy has to be consistently followed, or you follow different accounting standard? Different
Same
accounting policies.
Same policy to be followed.
Yes. So how would you know whether consistency is there or not within different financial years? So you refer previous financial statements, you refer current financial statements, and check whether fixed assets you followed SLM, previous year also you followed SLM, whether inventory you followed FIFO, whether previous year is also followed FIFO. What is the useful life you have taken for plant and machinery? What is the useful life you have taken for plant and machinery? Accounting estimate for that matter. So you check all these items whether it is consistently complied or not. Let us say if there is any change in accounting policies, what you will do? Whether that has been properly disclosed or presented. You observed something. Let us say you observed something. Okay, there is inconsistent, right? So what do you do? If there is inconsistent, management himself agreeing that there is different accounting policies we have complied, the impact is so and so. Okay, whether such disclosure is given or not, you will check. So this is the primary or basic audit procedures you will conduct for comparative information. Next. So if auditor becomes aware of any possible misstatement in the comparative, then what you will do? Then you need to perform necessary audit procedures to obtain sufficient appropriate audit evidence. If the auditor had audited the prior period of financial statements, then he should follow the relevant requirements of SA 560. So let us say the same auditor has audited the previous year, but he got to know certain information which came into light in this year. While doing this year audit, he got to know certain information. Sorry. So that has to be taken care. And finally, you obtain written representation, okay, regarding any prior period item that is disclosed in current year's financial statement. So in current year financial statements, have you entered any prior period item in current year? For that, you will take written representation. What we have discussed earlier is any entries they have passed in previous financial year, that is totally restricted. It is not allowed. You cannot take written representation for entries passed in previous financial year after audit's closure. That is not allowed, number one, and that cannot be taken by way of written representation because the numbers are available. So you can verify and conclude, not by way of written representation. But here what you are doing, whether any item relating to prior period has been accounted in current year, you need to take written representation. Clear? So these are the audit procedures one has to perform in case of comparative information. So till now we have discussed comparative information. Okay, the objective of comparative information, the standard SA 710 and audit procedures. What is comparative information? What it comprises of? How do we report it? We will discuss in further slides. So we'll take a short break. Okay, 10 minutes we'll take a break and we will again discuss about comparative information. Anyone has doubts still here? Before going to break, anyone has doubts?
So very clear, sir. I thought of the written representation when we discussed earlier. No, that is not the right case. Now I understood that if any entry passed prior year entry is passed in the current year, for that we need to get the representation, written representation.
Correct. You got the clarity. Okay.
Yeah. Actually, I'm not clear about that first point.
Okay, fine. So we'll take a break. Okay. Yeah, we can start the break. Technical team, you can take the break. Yeah. as well as the audit procedures one has to carry out in case of comparative information. So till now we discussed comparative information. We were using multiple times what is comparative information, right? So now we will discuss what it comprises of. What is comparative information? We'll discuss. So comparative information includes corresponding figures as well as comparative financial statements. So what we have discussed till now is the objective of comparative information and the audit procedures one has to carry it out for verifying comparative information. So we are now discussing what is comparative information. Okay, comparative information includes corresponding figures and comparative financial statements. So corresponding figures, okay, this is generally, even globally, people give audit report, the auditors give audit report on current financial statements only, not for multiple years. If in case they want to give multiple years, then we will say it as comparative financial statements. If auditor is giving audit report on single year, then we always refer the comparative financial information as corresponding figures. So in case of corresponding figures, the auditor opinion on the financial statements refers to current period only. And if you see any report nationally, okay, so it talks about only current period report. But there are cases, there are certain jurisdictions, there are certain countries wherein they want auditor to give report on both the years. So when we give report on both the years, we represent that previous period financial statements as comparative financial statements. So in that case, the auditor opinion refers to each period for which financial statements are presented. So let us say if auditor is performing audit on comparative financial statements, then the auditor opinion refers to each period. So we have seen opinion paragraph, right? So in which we need to give title, addressee, and we need to give which entity we are doing, which period we are doing, right? And what financial statement comprises of, whether it comprises of balance sheet, profit and loss account, statement of changes in equity, significant notes, significant accounting policies, notes, other explanatory information. So there we will write which year. So in case of comparative financial statements, we will write both the years. We'll write, we have audited the financial statements for the year ended 31st March 24 and 31st March 23. So we will give 2 years. In case of comparative financial statements, we'll mention 2 years, and the opinion is depend on for 2 financial statements. In case of corresponding figures, we will mention it as only current period. So we'll go in details about corresponding figures. So in case of corresponding figures, there are possible scenarios. The scenario is the corresponding figures were not audited at all. In case of the corresponding figures were not audited, just for the sake of hypothetical example, generally it's the audit will be conducted for every year, but in case if it is unaudited, okay, there are cases of unaudited and audited. In case of unaudited, the auditor should obtain sufficient audit evidence that the opening balance does not contain any material misstatement. So he has to verify the opening balances. So in case of unaudited, he has to verify the opening balances. Probably he has to verify the trade receivables by way of taking written representations, written confirmation, okay, balance confirmation, I'm sorry, balance confirmations. Trade payables, you need to obtain balance confirmations. Bank balances, you need to obtain bank balance confirmations. For opening balances also. The reason being the previous year is unaudited. So no one has audited the previous year. Hence, at least for opening balances, auditor has to do extra work to ensure that the opening balances are free from material misstatement. Plus, the auditors need to report such matter in other matter paragraph, because this is audit report, and you know for the fact that previous year there is no audit report, previous year the audit was not conducted. So in other matter paragraph, you need to tell to the stakeholders, users, you want to draw attention to the users saying that the previous year financial statements, the corresponding figures which are appearing in this balance sheet, in these financial statements are not audited. Clear? So in case of unaudited, the auditor has to carry out these procedures. Let us say the corresponding figures have already been audited. So the previous year is audited and the auditor has given clean report. The previous year would have audited by the same auditor or by other auditor, predecessor auditor. We call him as predecessor auditor. So by the same auditor or by other auditor, another auditor, but the report which was issued is clean. So should we comment anything in our report? Any reporting is needed? Any reporting is needed for current period? Auditor opinion shall not refer to the corresponding figures. It has been properly audited and the same auditor or a different auditor gave a clean opinion. That means there are no material misstatement observed. So this report should not refer to previous period or previous corresponding figures. In case the previous period it is audited and the opinion which was issued by auditor is modified opinion, qualified or adverse or disclaimer, the opinion, and the matter is resolved. The matter which was referred in previous year is already resolved. They have, let us say, there is overstatement of revenue that has been corrected. There is understatement of fixed assets that has been corrected. There was going concern note which they have not disclosed in previous year, which they have currently disclosed. So there are issues with regard to presentation. There are issues with regard to disclosure, which made the previous auditor gave modified opinion, but that has been resolved, that has been taken care. It is no more a modification in the current year. That has been properly taken care, properly addressed. So here also the opinion shall not refer to corresponding figures. Let us say there was a modified opinion in previous year and those matters were still continuing and that have not been resolved, that has not been addressed. In such case, if it is material to current financial year, we will give it as a modified opinion. Let us say previous year there was overstatement of inventory. This year also that overstatement continued and it is material to the financial statements, current financial statements. We will continue that modification. We will give it as a modification and we will reflect in our audit report that we will mention about current year modification as well as previous year modification. Current year is overvalued by 10 crores, previous year overvalued by 5 crores. So we'll give both the details if it is material to current year and the modification which was reported in previous year is not resolved. Let us say it is resolved, it is not resolved, but it is not material to current period. It is not material to current period. Then what we will give? We will mention it as an other matter paragraph. So there was modified report for the previous year, which for the current year, because of the matter, because of the situation, it is not material to current financial year. If it is not material to current financial year, but it is not resolved, hence we need to report somewhere. So we need to report it as other matter paragraph. These situations or these scenarios, are we clear with the scenarios? How do we report? When unaudited, when the corresponding figures are unaudited, when the corresponding figures are audited, clean, modified, resolved, not resolved. Okay, all the combinations have been covered. All the scenarios have been covered. Clear here? Up to here? Any doubt in this presentation or in this slide? Sorry.
Sir, in this case of modified, the resolved, auditor opinion shall not refer to the corresponding figure, which what it means, sir, that auditor opinion is not needed, right?
Auditor has to report or the audit report has to be restricted only to current period. So current period, whether it is giving true and fair or not, whether you have any emphasis of matter, whether you have any keyword matter, whether you have any other matters, but you don't refer to corresponding figures. You don't refer to corresponding period. So no need to deal with corresponding period.
Okay, sir. Now I'm clear, sir. Okay, got it.
Yeah. So this is all about corresponding figures. So when do we use comparative financial statements? There are set, as I told you, generally we follow corresponding figures. We don't audit previous years, but there are jurisdictions which mention you to do audit of both the years. So in that case, we go with comparative financial statements. So in case of comparative financial statements, what auditor has to mention? The auditor has to give an opinion for each period for which financial statements are presented. So if auditor has to mention about two balance sheets, auditor has to mention two P&Ls. So everywhere he need to comment on that the financial statements of current year and the financial statements of previous year are free from material misstatement, are true and fair view. So everywhere when you refer 1 year in comparative financial statements, audit of comparative financial statements, you refer 2 years. It means you need to refer each period for which financial statements are presented. Let us say you are auditing for 3 years. Okay. So let us take an example. If a company, they want to go for listing, okay. SEBI wants 3-year financial statements. SEBI does not want 1-year financial statements. SEBI wants 3-year financial statements. In such case, you need to follow SA 710 comparative financial statements. So SEBI wants you to do audit of 3 years. You to give opinion on 3 financial years, right? So in that case, you need to apply SA 710 comparative financial statements, not corresponding figures. So in that case, your report has to specify that for each period for which financial statements are presented. Okay, for 3 years, whether any material misstatement exists or not. So next, when reporting on current period audit, if the auditor's opinion on such prior period financial statement differs from the opinion previously issued on such financial statements, the auditor shall disclose the substantial reason for the different opinion in other matter paragraph in his report. So in this case, let us say there are 2 financial years. Previous year, same auditor. Here we need to give emphasis on the auditor's opinion. If the auditor's opinion on such prior period, okay, the same auditor, he has given qualified opinion previous year, but now he is giving in this report for the previous year, he is giving clean report. So we should understand details here, okay. When reporting on current period audit, if the auditor opinion on such prior period financial statements differs from the opinion previously issued on such financial statement. So last year, the auditor has given qualified opinion. Now in current year, we are not giving opinion on current year alone. We are giving opinion on current year as well as previous year. So we are giving opinion on the financial statements which we have already given. Again, we are giving opinion, but on a different date, right? So that date is already passed. Now you are giving opinion on same financial statements on a different date. However, in this case, there could be a possibility that there is change in opinion, right? Because of subsequent events. Example, let us take our contingent liability. In previous year, management has not disclosed a significant important contingent liability. So if the item which was supposed to be disclosed, supposed to be reported, not reported, is it a misstatement? The answer is yes. Definition of misstatement: the difference between the amount classification, presentation or disclosure of a reported item and the amount classification, presentation and disclosure of item which are supposed to be reported as per the applicable framework. If it is difference, so you treat it as a misstatement. So something which has to be disclosed as contingent liability but not disclosed previous period, you reported it as misstatement, you gave a qualified opinion. Now in the current year, that litigation has been closed, that order has been released in favor of the company, there is no liability arised. So now on a different date, if you see that qualification no more exists, that misstatement no more exists because the case itself does not exist. So now you are giving clean report for the previous period on a different date. Okay. Such scenarios, you need to mention in the other matter paragraph that, see, listen, previous period I gave a report which is qualified. Current year I gave a clean report for the same year, but due to this scenarios. So it's an auditor responsibility to inform stakeholders why there is change in opinion. What made you give that opinion and why that opinion is different. It can be clean to modified, it can be modified to clean, it can be qualified to adverse, it can be adverse to qualified. So this paragraph represents that. Okay. So the first paragraph represents each period. For second paragraph, if there is any difference of opinion, not on current period, on previously issued financial statements, the auditor shall disclose the substantive reason for different opinion in other matter paragraph in this report. So second paragraph, are we clear? You need more explanation? Let me know.
Sir, on first reading, it looked like a difference in opinion. So it has to be give us a qualified opinion. But see, after understanding the example, it is now earlier there was a qualified opinion. Now it is a clean opinion.
Yeah, but the emphasis has to be given. This qualified and clean report is pertaining to previous year, right? It's not about current period, because current period you have not given any other report. Current period you are giving report for the first time. So there is no difference of opinion. There are no two different opinions. Clear?
Yes, sir. Got it.
Yeah. So this is with
And
respect
sir,
to yeah. Sorry. Yeah.
sorry, sir. So here the auditor for the different periods, the auditor has to give opinion for all the three periods differently, or just one opinion for all the three periods?
One opinion for all the three years, but your opinion can say mention, okay, that this year this has happened. It has one opinion for all the 3 years. One opinion for all the 3 years, right?
Okay, so there cannot be any case like for the previous year we are saying it qualified, and for the current year we are saying it true and fair. So there
No,
cannot be such case.
no, there cannot be such case. Okay, so it is, yeah,
Okay,
clear.
sir. Got it. Yeah.
Yeah.
Thank you.
So this is with regard to if the auditor is same. Okay, the second paragraph is auditor is one and the same. Previous year he has done the audit. Current year also he has done the audit. Okay, he got different opinion. Now let us talk about previous year. The audit was done by carried out by Mr. A. Current year it is done by Mr. B. Current year is done by Mr. B, but Mr. B is auditing both the financial years, the current financial year as well as comparative financial statements. He is doing audit. Now, how do we report it? Okay, let us say there is this new auditor, Mr. B, okay, who concluded that there is a material misstatement present, which was not observed by previous auditor, Mr. A. Then he should inform to management, he should inform to those charged with governance. Also, he should inform to predecessor auditor, and he need to get a revised report from the predecessor auditor to either report, give a modified opinion, right? So he should give a revised report. That report can be considered, and the auditor shall report only on current period, because now you got a audit report from predecessor auditor. So current period it is done by Mr. B, but Mr. B has accepted for both the years, right? If in case the previous year which is audited by Mr. A, if Mr. B found some material misstatement, that has to be communicated to management as well as predecessor auditor, and predecessor auditor has to give a another audit report, different new audit report, which can be considered, and the new auditor has to give report only on current period, not on previous period. So here, let us assume if he accepted and he gave a new report, okay, then you can take reference of that new report. But if auditor has not accepted, the predecessor auditor has not accepted, or he refused to give a new report, then you need to follow the same approach. You need to mention that in other matter paragraph that the previous year has been audited by some other auditor on so and so date, and he gave a clean report. However, during our audit, we found a material misstatement under this item, and you need to give explanation to that item. Clear?
Sir, in that case, if the current auditor find mistake, material misstatement, the predecessor auditor is ready to amend the report and issue the current modified report, audit report. See,
Yes.
what about the report already issued to the stakeholders?
That's what. So we need to refer SA 560. Okay. We will also discuss when we are discussing SA 720. If an audit report is already been issued and you got to know certain information, you got to know certain facts, auditor got some knowledge about certain matters, okay, where you understand that what you have gave report is incorrect, the report which was given is inappropriate, then you have certain steps to follow. One of the step is you need to communicate with those charged with governance, and you need to communicate with all the stakeholders saying that I got to know this fact came to me on so and so date, and the report which I have given is incorrect. So kindly consider this as a new report, or this matter has to be included in the report, or this opinion has been modified. So it is auditor's duty to whomsoever the audit report is issued, to whomsoever the audited financials have been issued. Okay, let us say it is in public domain. So you should also give a communication in public domain, that because you got to know the fact. Okay, you cannot keep quiet. Tomorrow, if some regulatory authority comes and finds out that your opinion is incorrect, management as well as auditor will be in trouble. Okay, before someone notices, you yourself notice that your report is wrong. So it is your job to inform to those charged with governance, discuss with them. You can have like adoption of accounts happen in AGM. Okay, you can have an EGM, extraordinary general meeting. You can conduct an extraordinary general meeting where you can discuss all these matters and say, so what we have discussed, what is the report we have issued is not correct. So this is the new report. I got to know these facts later on. Okay, otherwise, if someone catch this and understand that your report is inappropriate, then both management as well as auditor in trouble. Is that clear?
Okay, right, sir. We will deal with as per SA 560 in this case.
Yes, we will deal as per SA 560. Okay. The same explanation I'll give again in SA 720. The example which I took is from SA 720. You got another information, okay, which is materially inconsistent with the financial statements which you have provided. Okay. So there is one more example which we'll take where we'll deal with SA 560. You are clear? Because see, certain facts are management override. Management, the frauds are intentional. Certain facts were not given to auditor. Okay. Somehow you got to know after releasing audit report. After a month, you got to know. Okay. Limited period review. The review is conducted every quarter, right? So the auditor will be visiting. The auditor will be performing verification every quarter. So in Q1, you got to know some information. Okay. Then you understood the report which was issued is incorrect. So it is auditor's responsibility. Once something comes to his information, he need to bring it to those charged with governance. Along with management, you can present it to investors, you can present it to real owners, shareholders. If those charged with governance is not cooperating, they refused, then you should go and you should explain, you should issue a new report. Okay. So that is with regard to comparative finance statements. So how do we report it? How do we report it? If the financial statements of the prior period were audited by a predecessor auditor, the auditor shall state in his audit report what he should state. He should state the financial prior period were audited by predecessor auditor, number one. In other matter paragraph, he should mention that prior period is audited by some other auditor. The type of opinion he has expressed in his audit report. Third, the date of that audit report. So three things he will report, both in case of corresponding figures as well as in comparative information. The auditor, he has to mention these items. What are those items? Very much clear. Previous year, the audit was carried out by so and so firm, and they have given clean report or they have given qualified opinion. On which date they have given? The date of that audit report. So these three things has to be mentioned. So we came to reporting requirements. These are the three things auditor has to report. Very easy. In other matter paragraph, you write previous year, this is auditor, this is the opinion, and this is the date on which he issued the report. If it is not audited, we discussed, the auditor shall report in the same in other matter paragraph in his audit report that corresponding or comparative figures are unaudited. However, the disclosure does not relieve him from his responsibility of obtaining sufficient and audit appropriate evidence for the opening balances that do not contain misstatements that materially affect the current period financial statements. So the current period closing balances are very much dependent on opening balances. So current year net book value of fixed assets are dependent on opening net book value of fixed assets, right? Current year you have liabilities, let us say borrowings, that is opening balances. If opening balances are materially misstated, it is also also shows that your closing balances are also materially misstated. So it is, if financial statements are unaudited, previous year financial statements are unaudited, it is auditor's responsibility to at least verify whether the opening balances are free from material misstatements or not. It is auditor's responsibility to verify, and that the fact of the financial statements are not audited has to be mentioned in other matter paragraph if it is unaudited. If it is audited, you understood what to report. If it is unaudited, you understand what to report. So this is all about SA 710. We'll look into some questions. Before going to look into questions, do you have any doubts till now?
Sir, on the point number 2, if not audited, which means, okay, in this case that the SA 510 also will apply, sir, initial audit engagement and opening balances.
Yes. See, what we have just discussed, you are right. What we have just discussed in audit procedures is nothing but SA 510 only. You check the current year financials, okay, is coming from the balances which are closing is currently coming or not. You will check that all that initial audit engagements which you have done, you need to carry out.
Oh, okay, sir.
Yeah. So we will see 1-2 questions. Okay, thereafter we'll move to SA 720. So Neptune Limited is a company that holds significant investments in a portfolio of equity securities. Due to decline in market value, the company's investments have suffered a notable diminution in value. For the financial year ended 31st March 23, the audit report of Neptune Limited included a qualification regarding the non-provision of 70 lakhs for the diminution in value of investments. As the auditor for the financial year 23-24, how would you report in the following situations? So what has happened? The audit report of Neptune Limited for the financial year ended 31st March 23, the audit report of Neptune Limited included a qualification regarding the non-provision of 70 lakhs. Okay. So last year, so now current year financial, how do you report? In 23-24, 31st March 24, you are giving the audit report. So previous year, there was a qualification. Why there is a qualification? There is non-provision of 70 lakhs. So non-provision means you have not provided for and your investments are overvalued, misstatement. So it has been qualified. Now there are scenarios. If the company does not make a provision for the diminution in the value of investments, even in the year 23-24, how would you report? If they make adequate provision, how do you report? So scenario 1, how do you report?
Scenario 1, we will provide that modified opinion, sir.
We'll provide modified opinion. Good. In modified opinion, what you will refer?
We will refer the corresponding figures.
Correct. We will refer current year what has overstated, and we also refer corresponding figures overstated. So we will report both current year and corresponding figures. In second case, what do we do in second case?
Second case, they provided the adequate information disclosed. Then we will put it in the other matter paragraph, the fact about it.
So we need to recall what we have discussed, right? So if adequate provision is already made, okay, so then what we will do? So let us see this.
We will update in other matter paragraph.
See, auditor opinion is modified in corresponding figures. In previous year, the auditor opinion is modified and it is resolved. It has been corrected. Okay. The auditor's opinion shall not refer to corresponding figures.
No, so the thing is that we will give you only, we will state in the current year only.
Yes, we will only state the current year. We will not refer to corresponding figures. Clear? So let us see the answer. In the instance case, if Neptune Limited does not make a provision for diminution to the extent of 70 lakhs, the auditor will have to modify his report for both current year as well as previous year figures as mentioned above. So he has to modify and he has to give current period as well as previous years. Okay. If provision is made, the auditor need not refer the earlier year's modification. No need to refer the modification. Clear? So next we will discuss SA 720. 720 talks about auditor's responsibilities relating to other information. So what do we discuss? We'll discuss as usual the objective of standard, definitions of what is annual report, what is other information, and audit procedures. Although we will not call it as audit procedures because we will only read and we will only consider. We can say auditor responsibility. We will not say auditor audit. We will say auditor's responsibilities. Okay, here you just read the other information and you will consider. Then how do we respond? Finally, how do we report? So that is all about which we are going to discuss. So objective of the auditor, okay, in case of other information are, first you consider whether there is a material inconsistency between the other information and the financial statements. So here two things. There are financial statements, there are other information. So the other information, what is other information? We should know about annual report. What is annual report? Companies annually they will give report to their stakeholders about their company performance, about financial statements, about audit report, about their future outlook. Let us say their future outlook, how the company is going to perform in future, ratio analysis, management discussion analysis, governance, corporate governance, director's report, many things they'll include many things in an annual report. We will see one annual report, okay, for quick reference. So other than financial statements and audit report, any information which was disclosed in that document, in a single document or multiple documents, so that document you call it as annual report, or that documents you call it as annual report. So we should verify the information which was presented in other information and the financial statements, whether there is any inconsistency. Okay, we should consider that. Okay. Second, we should consider whether there is material inconsistency between the other information and auditor's knowledge about in the audit, obtained in the audit. So it is not about financial statements alone. It is about if there is any material inconsistency between auditor's knowledge obtained in the audit. Let us see few examples so we'll get more understanding. So management is telling that we got revenue growth of 40%. So last year it is 10 crores. Now this year the revenue is 14 crores. In a way they are telling 14 crores. But if you see the financial statements, the revenue growth is only 35%. Okay. So now what was present in the financial statements, the revenue growth versus what they have mentioned in the other information, it is materially inconsistency. That has to be considered by auditor. Let us say, example, let us say the company is telling, the management in other information they are telling that we are 100% legal compliant. We are 100% legal compliant. There are no non-compliance from any act. But in the financial statements, you already made a provision for income tax demand, GST demand. If what you are claiming in other information versus what is presented, what is reported in financial statements, if there is any inconsistency, then auditor has to consider that matters. Clear? Now coming to auditor's knowledge obtained in the audit. Auditor's knowledge obtained in the audit. Okay. So this is first item. We took some examples. Second item. Let us say management in the other information they are mentioning that the operations are super fine. There are no disturbances in the operations. But auditor know there was some fire accident occurred. There was some flood occurred. Okay, which auditor knows from his knowledge while verifying certain documentation, he knows that 1 month production stopped. He knows there is no revenue in 1 month. Correct? But that is not reported in financial statements because neither management reported nor auditor reported. Okay, that is not form part of financial statements. But other information, management is telling that there is no disturbances. The operations were running smooth. It was going fine. But there was some fire accident occurred. There was some flood occurred. There was some disruption in the operations for 1 month, for 1.5 months, for one branch. So the other information is telling something, giving 100% assurance, but in the auditor's knowledge, there are certain events occurred, there are some situations happened. So that is within the auditor's knowledge. It is not reported in the financial statements. So those items also has to be considered. So the objective of the auditor has to read the other information and consider whether there is material inconsistency between the other information and financial statements. Let us say in the other information, management is telling the operations are working fine. There is no impairment. None of the assets was less than their recoverable value. I mean to say there was no impairment needed. All assets are running fine. But here when you see financial statements, you already created impairment loss in your P&L, right? So this is few examples to understand there is material inconsistency between what was mentioned in the other matter, other information versus what is reported in financial statements. If there is any inconsistency. So these things auditor has to consider. After considering what he should do, he should respond. So how do you respond? You analyze, right? You analyze. So once you consider that, you see whether the information which was reported in financial statement is misstated or other information is misstated. Whether the knowledge which I got is incorrect or whether the other information which was reported is incorrect. So you should respond. Okay, you should identify appear to exist when the auditor becomes aware of other information appears to be materially misstated. Lastly, what you should do, you should report in accordance with this essay. So you should report accordance to it. How do we report? We'll see that. Objective is clear. So the objective is, first we should consider, what we should consider, whether there is any material inconsistency between other information and financial statements. Number one. Number two, whether there is any inconsistency between other information and auditor's knowledge. So auditor's knowledge is not documented. Auditor's knowledge probably not documented in financial statements. Probably it may be documented in audit working papers. It may not be documented in financial statements, right? So there is a mismatch. It has to be taken care. Just for an example, disputed dues. So you remember Caro's clause 7B, right? Or clause 7A. 7A, it talks about undisputed dues. For a delay more than 6 months has to be reported. Let us say there are 2 months delay, there are 3 months delay, there are 15 days delays in multiple acts, GST, income tax, any demand you have paid 2 months delay. Now, other information, management is claiming that we pay our dues, statutory dues on time. Even there were cases where we paid before and in time. Now, auditor working papers are telling that there are delays. Whether auditor has reported that, he has not reported because it is not more than 6 months. He has given clean report in, even in language in Caro, he has given that the statutory dues are regular in payment. That also he has reported. But auditor's knowledge, auditor working paper says there are delays. So this is the difference between the material inconsistency between other information and auditor's knowledge obtained in the audit. So once you know these cases, so we will see how do we respond, how do we report. But before that, we will also understand the definitions. So pretty much objective is clear. Any doubt here? Any doubt in objective section?
That's clear, sir. I'm just at the point number B to consider audit knowledge, other information versus auditor knowledge. The same in same things in the SA 560 also, that the auditor knowledge is to obtain the fact known that after the reporting period in the material in the financial statement is not properly disclosed. That case a subsequent event will come. But here in this case is not relating to financial statement, relating to the other information.
Yes, correct. You're right. So let us see definitions and we'll see how do we respond, how do we report quickly. So I already explained the definition of annual report. It's a document or combination of documents prepared typically on an annual basis by management or those charged with governance in accordance with law, regulation, or custom. As a practice, you give to stakeholders. By mandated by law, you give it to stakeholders. So it can be by practice, or it can be by regulation, or it can be by law. To whom? To owners, and you along with financial results, along with financial positions, you give it. So typically it includes many things like corporate governance, disclosures, management discussion and analysis. We'll see one example also. Okay, so to get more clarity. So now what is other information? Other information is financial or non-financial information other than financial statements and audit report. So we are not talking about financial statements. We are not talking about audit report. Outside these two, if annual report consists of something which is of nature of financial or non-financial. So what we have discussed, it can be like impairment, revenue growth, or financials. Let us say I am giving clean opinion, or I am giving clean sheet to my stakeholders that no legal irregularities, no disruption in business. It's a non-financial information. So other information can be financial or non-financial included in entity's annual report. So now you know there are two documents, okay, within the annual report. One is financial statements and auditors report is one set. The other set is all other information. So now we are comparing other information with this set. And if it is material inconsistency, we will respond to it and we will report to it. So how do we respond? So we understand. One second. Am I audible?
Yes, sir, you're audible.
Yeah, thank you. So auditor identifies. So we have identified. We identified there is a material inconsistency. Okay, which is appear from other information. Now, first, what we should do, similar to all other standards, we will discuss with management, and we will perform other audit procedures to conclude whether. So we understand there is material inconsistency. Now we need to respond. How do we respond? First, we will inform to management or TCWG, and we will perform other audit procedures to conclude whether material misstatement is of the other information or material misstatement of the financial statement. Both cannot be right. You understand there is material inconsistency. Whether 35% is correct, whether 40% is correct, revenue growth. Whether there is delay happening in statute of dues, whether no delay happened. Whether fire accident really occurred or not occurred. So, one of them is correct, right? So, the first case is other information is incorrect. Other information has a material misstatement. Second case is the financial statements is misstated. What management is claiming in other information is correct. Financial statements is incorrect. So you may conclude either of this, right? There is one more scenario. The auditor's understanding of the entity and its environments need to be updated. So we understand there is material inconsistency between other information and auditor's knowledge, right? So the third scenario is auditor's knowledge is incorrect. So there are three scenarios. First is the other information itself is wrong. Second is the financial statements is wrong. Third is the auditor's knowledge is wrong. He was under the impression that the growth is 25%, okay, or some information which he understand, his working papers are wrong, okay. So possible scenarios, these are the three possible scenarios. So what do we do in each scenario? We'll see. So now, before going to this, so the other information, the timing of other information also we need to look at. One more point we need to discuss. Other information can be provided before release of audit report, even after release of audit report. There are two more scenarios coming up here. So the other information for auditor to read, auditor to consider, auditor to check whether there is any material inconsistency. So the other information can be obtained before the audit report or after the audit report, right? So before the audit report, yes, you have the audit report with you. So if something comes wrong, material misstatement, you can modify the report. It is still in your control. But if other information is received after the audit report, then it is little more serious because the report has been already released to users and you got to know there is something wrong. So that's what we have discussed in when we are discussing SA 710. So if something comes to a knowledge of auditor, which is materially misstated, but the audit report is already gone, so how do we report? You need to call for EGM, you need to communicate to all the stakeholders. That is what you need to do. So let us see each scenario. So the first scenario is the other information is received before audit report is released. You noticed there is some misstatement in other information. Misstatement in other information, not in misstatement in financial statements. What is first thing you do? You communicate to management. Management understand it. Management rectified it. And management gave the other information which was rectified. Now there is no inconsistency. So everything is fine. You can go ahead with the report. No need to report anything because the audit report is still in your control. The financial statements are still in your control. Nothing is disclosed to public. Nothing is disclosed to stakeholders. And management listen to you and management is rectified the mistake. So here the thing is fine. The next thing is, if they don't rectify, if those charged with governance is different from management, you report, you communicate to those charged with governance. Again here, if they listen, they rectified, fine. If they have not rectified, because audit report is with you, you can withdraw or report in other information. So you can withdraw or report in other information. So if practically possible to withdraw, you can withdraw. If it is not possible, what you should do? You should report in other information. Why are we not modifying our opinion? Anyone?
Sir,
His assessor
because
given
it's
fine.
named the other information.
Correct. Good observation. So the misstatement happened in other information. You understood material inconsistency. So we came till here that we understand there is material inconsistency, but the material inconsistency you have verified, you have conducted some audit procedures, you asked for some information, and conclusion is the misstatement in other information, not in financial statements. Hence, you have a section called other information where you report in that section, not as an opinion paragraph, not keyword matter, not other matter, not emphasis of matter, but in other information. If withdrawal is not possible, let us say the information was received, the other information is received after the audit report is issued, and you got to know that misstatement in other information only. You communicate to management. If they listen, okay. So you tell them to make corrections and disclose it to public, disclose it to stakeholders. They listened and they did it, fine. Nothing to do, because they themselves telling to public, or they themselves telling to stakeholders that what has happened is wrong, right? Then if they don't listen and they are different from those charged with governance, move ahead, tell them. If they go ahead and they admit, no problem, nothing to do. If they don't listen, then what you do? You communicate to users of financial statements by way of attending in EGM, by way of communicating, okay, in general public, okay, you should do it. Communication to users of financial statements is responsibility of auditor. SA 560 is applicable here also. Let us say the other two scenarios. Before you obtain the other information, now the conclusion is the misstatement happened in financial statements. Now your financial statements is wrong. You communicated to management rectified, misstatement is gone. Fine. Management not listen. You go ahead to TCWG, listen, rectified, no problem. Not rectified, you can withdraw or you can modify the opinion. Here we are modifying the opinion. The answer is, mistake is in financial statements. What was mentioned in other information is correct. What was mentioned in financial statements is wrong, is incorrect, is misstated. Clear? Before, that is the scenario. After, the scenario is pretty much same, and you communicate to users of financial statements. Anyone got any doubt till here? All cases you could able to understood? You could able to follow? Any doubts?
Yes, sir. Clear, sir.
Yeah. So now, once we are clear with the response, now we will move to reporting. How do we report it? Okay. In other information paragraph, how to draft it? Okay. It has 5 sections. First, the other information is responsibility of management, right? The other information is responsibility of management. The preparation of other information is responsibility of management, that you will mention. So you write management responsibility. Then you will write what comprises of other information, what all things comprises of other information, and when this other information is supplied to auditor. So in the audit report, auditor will write when this other information is supplied to us, supplied to me, that also will write. So what comprises of other information, and when this information is given to me for my reading, my consideration. Then you will write that I have not did the audit. I am not going to give any opinion on other information. Other information is outside my audit. I am not giving you any opinion. I am not giving you any opinion on other information. So that kind of you are giving a clear disclaimer that other information is not my cup of tea. It is outside my jurisdiction. It is outside my audit scope. I am not giving you any opinion. Then you will write what is my responsibilities, what is auditor responsibilities. Then finally, what is auditor responsibilities? That he should consider other information. Objective, we'll go back to objective. He should consider other information. He should check the other information is materially inconsistent with financial statements or auditor's knowledge. And if he come to know, he should perform audit procedures and know which is materially misstated. And finally, he should communicate, okay, to stakeholders. So auditor responsibility you will mention. Finally, you will conclude and you will report. So how in the financial annual report or how in auditor report it reflects, let us see. So first you will give a heading that information other than financial statements and audit reports there are. You will give a header. Then you will write management responsibility. How do you write management responsibility? The company's board of directors is responsible for other information. First. Second, what and when? The other information comprises the board's report, including annexures to board's report, management discussion and analysis, business responsibility and sustainability reporting, corporate governance report, but does not include a standalone financial statements and other audit reports, which we obtained prior to date of auditors. So this is what, this is when. So what is other information that you have received and when you have received? You can receive other information before the audit, after the audit. In this case, it is prior to audit. In some cases, it is after the audit. Two sections clear, management responsibility, what and when. Third, you will give opinion. Our opinion on standalone financial statements does not cover the other information. We do not express any form of assurance on conclusion thereon. Other information I am not giving because the readers may under impression that as I am including the other information paragraph in auditor report, the users may think all the other information is also audited by auditor. No, I have not done the audit. What I have done is financial statements audit. I have not covered other information. So I don't express any assurance. Auditor responsibility. So you write that you should read and you should consider that any inconsistency is there. Then if you come to your knowledge, okay, otherwise appear to be materially misstated. So you write your auditor responsibility, fourth section. Last section is conclusion. So because you have obtained the audit, if based on work performed, we have performed, we conclude that there is a misstatement in this other information, we are required to report that fact. If we conclude that there is a misstatement, we report that fact. We have nothing to report in this record. So we don't found anything, no material inconsistency. It is clean report. There are no material inconsistency. Okay. So these are the 5 sections you report in auditor's report by way of other information. So this is how you report for SS 720, which is other information. Clear? 5 sections you could able to recall. You could able to, okay, carefully see. It's not, although it is one paragraph, okay, in real life, but it consists of 5 sections. So management responsibility, auditor responsibility. You will not write again headers like what we do in audit report. We give separate sections, but other information will not create separate sections. It all comes in one paragraph. I created sections, I created divisions, but it comes as one paragraph. Clear? Next, we'll see 1-2 questions. Then we'll move to MCQs. So Naresh and Co. Chartered accountants have been appointed statutory auditors of Suchi Limited for the financial year 23-24. The audit team has completed the audit and is in process of preparing audit report. Completed the audit, but it is the process of preparing audit report. The management of the company has also prepared draft annual report. the audit in charge was going through the draft annual report and observed that company has included an item in its annual reporting indicating downward trend in market price of key commodities, raw material as compared to previous year. So what was mentioned in other information? Other information, it indicates a downward trend in market prices of key commodities or raw material. However, the actual profit margin of the company as reported in the financial statements has gone in reverse direction. So can someone explain what is this? So this is the other information they are telling that the raw materials which we procure, the raw materials which we are procuring, the prices have been reduced, right? However, the actual profit margin of the company as reported has gone in the reverse direction. It means,
which means in the favorable condition.
no,
In financial statement, it is a favorable condition. In the other information, it is unfavorable condition.
see, we are telling indicating a downward trend in the market prices of key commodities or raw material. So if raw material prices are reduced, that means your cost of metal consumed is reduced. If your cost of metal consumed is reduced, if your purchases are reduced, your expenses are reduced, your profit is more. Okay. So what was mentioned in other information is my cost is reducing. My purchase have been reduced. Okay. But actual profit of the company as reported in the financial statement has gone in reverse direction. He has not telling profit is increasing or profit is reducing. He just told what has mentioned in other information versus what is in financial statement is the reverse direction. Okay. Clear? The audit manager discussed this issue with a partner of the firm who in reply said the auditors are not covered with such disclosures made by management in its annual report, it being the responsibility of the management. Do you think the partner is correct in this approach on this issue? Do you think partner is correct?
No, sir.
Partner is incorrect. The reason being, what is, so something which you have mentioning other information versus what is financial statements. If there is a material inconsistency, you should report it. Okay. And audit report is still in the hands of auditor, right? The process of preparing audit report. So what you can do? What is the procedure you follow?
We need to check whether that other information is correct or the financial information is correct.
Correct.
Accordingly,
Okay.
we need to modify it.
Okay. So if our financial statements is incorrect, you will, and management is not ready to correct, then we will modify. If other information is incorrect, then we will mention that in other information. Clear?
Yes,
The
sir.
cases which we have covered. Okay. So let us look at the answer. So management to correct the other information. If management agrees to make the correction, the auditor shall determine that the correction has been done. Refuses to make the correction, then the auditor shall communicate matter with those charged with governance and request that correction to be made. Okay. Further, he has not given. But the question is whether the partner is correct.
No, partner is not correct.
Partner is incorrect. Okay. Clear? So there is one more miscellaneous topic which we'll cover quickly and then we'll see few MCQs. So reporting to shareholders versus reporting to those charged with governance. What is the difference? What are the documents you report to shareholders? What are the documents or information you report to those charged with governance? Let us say 2 marks question, descriptive question if they ask, what do you write? So the audit report which you prepare is for the consumption of shareholders, right?
Yes, sir.
The matters which you deal in audit, the challenges,
the audit matters, emphasis, qualification, which you are going to present in audit report. First, you discuss with those charged with governance, right? So the communication which was done with those charged with governance is internal, is private. The communication which you do with shareholders is public, is in public domain. Okay, you file with ROC, you can download and see your audit report. So the reporting to shareholders is mandated. Okay, and the reporting which you do is audit report. Here you disclose emphasis of matter, key audit matters, other matters which you want to discuss, challenges, deficiencies in inter control, scope of audit. Starts with SA 315, okay, SA 210, okay, SA 315, SA 330, whatever, SA 260, SA 265, all the standards you discuss with those charged with governance. So matters which you discuss with those charged with governance are different from matters you discuss with shareholders. The documents, the information which you deal with those charged with governance are different from shareholders. This is public, this is private. Okay, this is audit report, this is deficiencies, scope, emphasis, other matters. Clear? So that is how you need to write the answer, and which sections talks about, which auditing standards talks about. Let us say section 143 talks about you to give an audit report and comply with all the auditing standards and sign the balance sheet. 145, you can refer that in reporting to shareholders. Here you can refer 143 9, where you need to comply with standards on auditing, which mandates auditor to report to those with governance. So certain standards, certain sections you can refer and you can mention here.
SA 260.
Yes, 260, correct. So this is how I gave you basic idea. So these are a few more pointers you can remember. Okay, for a 2 marks question, if direct descriptive questions, if it comes. Okay. So at glance, if someone wants to know what standard, what is the description, what is the purpose, if you want to recall, this is a short summary. Okay. So till now, any doubts?
No, sir. It's very clearly discussed, sir.
Yeah. So we will take up few MCQs. Hope you can see the Word document.
No, sir, not yet.
It's not visible. Now it's visible. You can make it full screen.
Sure.
Yeah.
Yeah.
So is it fine?
Yes, sir. Visible, sir.
Yeah.
So during an audit, the auditor identifies a major litigation disclosed in the financial statements that may affect future operations. The auditor's opinion is unmodified. Which paragraph should be used to draw attention?
EOM paragraph, sir.
Yes, EOM.
Why? Anyone has okay. Why so? Why not opinion paragraph? Why not
It is
key audit matter
disclosed.
paragraph?
It is disclosed in the financial statements, and the opinion is
Correct.
unmodified.
Correct.
And to draw the attention of the users of the financial statements, EOM is required.
Yeah. Clear? So it is, the answer is emphasis of matter paragraph, right? Okay. Next, during the audit of comparative financial statements, the auditor finds that last year financial statements were misstated and a prior period adjustment is made in the current year financial statements. How should the auditor report? So he should include a separate report for prior year. He should modify current year opinion. He should disclose substantive reasons for different opinion in other matter paragraph. He should express adverse opinion on current year financial statements.
Sir, we discussed one point, if that prayer period is audited by someone predecessor, then we will ask
Yes.
them to check with them to modify the audit report.
Yeah.
Okay, that is apart, but that part is not given in the answer. However, we will
Correct.
think it.
Yeah. So your understanding, your recollection is perfectly fine. But out of these four, which is the suitable answer? Like how should the auditor report now? So you want to pick one out of four. How do you now you apply that? Whatever you said, you apply that.
So it would be C.
So whether you give adverse opinion on current year financials, the option is, so here you are not talking about previous year financials, right? Okay. Modify current year opinion. Again, here also you are not talking about previous year, right? Include a separate report for prior period. This is also not possible. You cannot give separate opinion, separate report for prior year, right? So the option is C, disclose substantive reasons for different opinion in other matter paragraph.
Yes, sir.
So out of these four, so what you do, let us say the prior auditor has given one opinion, right? But now you got different opinion. Okay, you got different opinion. Probably the same auditor can get that also, right? So in this case, option C, we need to choose option C, which is disclose substantive reasons for different opinion in other matter paragraph. So we will write in the other matter that previous year the auditor has given clean report or whatever report on so and so date. However, during the audit of this year, we found a material misstatement and we found a prior period adjustment that happened in current year. That we will mention in the current year financial statements in other matter paragraph. So option C is the best option out of four options. Clear? Next.
Yes, sir.
So auditor wants to highlight that a subsidiary not included in consolidation is undergoing liquidation and opinion remains unmodified. Which paragraph should auditor use?
Other matter.
Other matter.
Yes, other matter.
Correct. Other matter, right? Because this is not something which is already available in the financial statements outside the thing and auditor's report or auditor's responsibility, right? So other matter paragraph. Fourth, which of the following statements most accurately distinguishes a key audit matter from an emphasis of matter paragraph? So you should have knowledge about key audit matter and you should also have knowledge about emphasis of matter paragraph. Eliminate. You start eliminating one after another, then you will land up in the correct answer.
Yes, sir. A also eliminated, B also eliminated. I'm going through C.
I guess it should be
C
C.
would be the answer.
Correct. The answer is C. Okay.
Yes, sir. C is the answer, sir.
Yeah. Clear. Anyone got any doubt? Yeah. Moving to next question. So during audit of Alpha Limited, the auditor notes that the company owns several warehouses, but title deeds for two properties purchased in financial 22-23 are still registered in the vendor's name due to a court case. Management has disclosed this fact in the notes to accounts, claiming legal possession. How should the auditor report? So would you report it as a key audit matter? Would you?
No, sir, we will report it to the Caro, sir. Caro, I think, immovable property. The title deed, if it is a different person, we need to report it. I think 1C will be there.
Correct. And what is 1A? 1A represents? What is 1A represents?
Sir, 1A talks about whether they are maintaining the record or not.
Good, good. So the answer is D, 5D. Okay. Next. Epsilon Limited has a turnover of 400 crores, but no internal audit system. During external audit, the auditor identifies unauthorized advances by a finance executive amounting to 50 lakh. Not yet recovered. How do you report? Where do you report? So here memory, we are testing your memory. First you tell me what are all the irregularities happened.
There is a clause where we need to report that internal audit system is there, appropriate, commensurate with the business of the entity. There should be an internal audit
So which
system.
clause talks about that? Which clause talks about that?
So internal audit talks about clause 14, sir.
Okay. Then what has happened? Any other item you can see? Any other item you can think that some other irregularity happened?
Unauthorized advances.
Okay. Unauthorized advances means will it tantamount to
The guarantee, investment, fraud.
fraud? So where do you report fraud?
Sir, fraud, I think 12, 12 or 13.
12 or 13? So 14 is clear, right? So we having options B and C. Internal audit 14 you have already told.
Yes, yes.
So now it is, you need to decide between B and C.
Clearly
Whether it is 12
13,
or 13.
it would be C, 13 and 14.
13, I think 177 and 188 disclosures.
Yeah. 13, I think, related party transaction.
13 is not related to fraud. Okay.
I think 15. The 15 is not there. Okay.
Okay. So yeah, there could be error in one of the options. So you understand there are two mistakes, two reporting items. One is internal audit system is not there and fraud has happened. So these two Caro clauses you will refer and you will report. So these are the MCQs for today. Okay. So any doubts still here?
So what would be the answer for this last?
The 14 is internal audit and fraud is with regard to, I think, just a second.
Sir, fraud actually 11, sir. Fraud.
Yes, fraud is 11.
So actually 143.12 we talk about the central government.
11. It's 11. 11 and 14 is the right answer. 11 and 14 is the right answer. The options are missing there. One of the option. Okay.
So sir is making you of habit that in case if in the examination you find any such kind of question where no option is given, no correct option is being given. So you need to think that question carries only 2 marks. So how much time you need to allot? And rather than focusing so much on that, it's better to move on and manage the time, right? So this is time management technique, and definitely where correct option is not there, and in that case only, because sometimes it happen in the examination also. True. Right? So no issues. There was no correct option, but yes, then you must be knowing which clause will be applicable in that situation, right? So clause 11, and then for internal audit, if you are able to recall that clause number, then you will be able to opt for the correct option. But yes, this is a lesson or learning for us that if you are not finding any question, right? Like in, I think it was in May paper, there was one MCQ when no correct option was given. right? So and many of the students wrote that we done for 30 minutes we were doing calculation. So we need to emphasize that how much marks it carries and how much time we should devote, because otherwise our time management will be disturbed. And of course we will try once and twice, and thereafter we need to complete the whole paper, and at the time of revision we will look into that again, right? But yes, for that we should have thorough knowledge. And for clauses also, for Caro also, we can develop this habit, at least 5 clauses in one day. Next day we are again revising, and next 5 clauses, right? So this way what will happen, it will be settled, like it, you will be able to recall faster. So multiple revision is very, very important.
Oh, okay, thank you so much, ma'am. Because
So
now,
this is a tip from my side, because I have observed several times that like, of course paper should be 100% okay, there should not be any ambiguity, but you never know, sometimes it happens, then how we should deal with. Sometimes we are close to, like, two options seems very closer, then which one to be opted. So this practice can make us perfect, that how we will be tackling the this kind of issues also in the examination. But do remember, when you are having writing practice now, then you'll be able to have better time management. So you'll be able to use 15 minutes, best utilization of those 15 minutes which is given for reading time. And of course you must have last 10 to 15 minutes for revision also. For that,
yes,
multiple revisions are definitely very important and essential. Venugopal sir, if you want to say something.
No, ma'am. If anyone has any doubts, which we can discuss, otherwise,
Yeah.
we are done with the
So,
session.
students, if you have any doubt, you can ask Venugopal sir. And definitely, your feedback is very, very important for us. It helps us to improvise in the next session. So, that is very essential and very important. So, we'll definitely seeking for your feedback. So, please do not forget to fill the feedback. Yeah. If you have any doubt, Sanjay, Ayush, or Samyanathan, or any of the student, if having any doubt, you can please ask. Otherwise, we'll wind up the session. Yeah.
yeah. Actually, the classes taken by that Venugopal sir is perfectly fine. I feel that he is explaining the provisions and giving the lot of illustration and explaining through question and answer, rapid question. It's really no, it's very useful. I really thankful for Venugopal sir and ma'am. Thank
Yeah.
you so much.
Thank
Thank
you.
you for your feedback. I also want to hear from you that how we can improvise. So you can write, there is a feedback form. You can click on the link and you can submit it, and you can share your rating also. Yeah. Any other
Okay.
query? Yeah. Ayush, Sanjay. So
Ma'am, the
if,
last question, really
yeah.
you provided nice tips, ma'am. Actually, I am also confusing on the four option. No, you see, we keep on spending time for that particular question. So
Yes.
actually, it's none of them was correct. Okay.
Then institute will take care, na?
Yeah, institute
So
will take care.
we need to understand what is the weightage of that particular question. It sometimes we start with the question we know best and we start writing that question, and emotionally we feel so we start writing and we do writing for a long time. So time management is very crucial and important, because each and every question carries specific marks. Of course, the question which you know best, you should start with that. You can give 2-3 minutes more to that, but you need to plan your time. So time management should be perfect, then you will be able to revise also, because many times we leave the question or some part which we are not able to recall when we are writing in the examination. And when it's complete, if you do revision, if you review your answers, you get to know that yes, I forgot, I skipped this part, and you can correct that. So 10-15 minutes for revision is also important. So time management part can come only when we practice. So model test paper, mock test paper, or previous examination question paper, take that and sit in examination condition itself.
Thank you, ma'am, for the tips.
Yeah.
Yes, thank
So
you, ma'am.
I
Thank you,
think
sir.
Thank you, Venugopal sir, for the wonderful
ma'am. Thank you.
session, for sharing your knowledge with the help of MCQs and questions, right? And giving them this tip also, because there was no correct option. So I share this tip also, because this kind of situation happens in the examination. And thank you to all the students. So please do prepare whichever topics we are covering now. Simultaneously, you make practice of those topics. Prepare your own notes. Compile the questions which you feel that the major provisions are covered over here, so that when at the time of examination you are able to revise and you can go for the paper. And those questions which carries more provisions, or more more than one standard, or maybe wherein standard is also involved, caro is also involved, so you should note down at one place, so when you are going for the paper, at least you are able to revise with the help of that. Or those questions where you are committing mistakes, maybe once, twice, or thrice, where you feel conceptual issue is there, those questions should also be marked in your notebook, so that before paper you are able to revise the same. It's up to you. Lengthy standards or lengthy syllabus also you can make it smaller when you are preparing your notes. You will be able to mark that this particular provision required twice or thrice revision, or this is simple and I know this. It's small notes if you're writing in front of that. So 1.5 day will also be very much sufficient for you, or 2 days will be very much sufficient for you for revision, right? So with this, thank you, Venugopal sir, for sharing your knowledge and for making them practice with the help of MCQs and questions and rather model test paper, our MCQ case scenario booklet. So almost you try to cover all the resources so that student can have the idea of that topic, right? Thank you to all the students for listening patiently and understanding the concepts. Thank you to IT team. Thank you to BOS support team. Thank you to each and everyone. And with this topic, Essay 700 series, reporting chapter and Caro, is completed today. In the next session, we'll be moving towards next chapter, chapter 8, specialized area, and it's on Monday, right? So in this week, we are having only today's class. So we'll be meeting again on 27th, right? So till the time, please do revisions, have multiple revisions, so that, because this topic is very important, I initially also told you. So have multiple revisions, right? In case still if you find any difficulty, you can get back to us through BOS mobile app, or you can also call on 0120 3045 925. So with this, thank you each and everyone. Thank you. Thank you for this.
Thank you all.
Yeah, thank
Thank you,
you.
sir. Thank you,
Thank you,
ma'am.
ma'am.
Thank you.
Yeah, Shogi, session closed. Thank you.
Thank you.